So good morning, all of you. So I am from Bombay. I hope you might be knowing that I am coming all the way from Bombay for taking lectures for you all for CA Final Direct Tax in full English. Yes, please come. So I will just speak few things about how we are going to go about with the batch initially, okay, for the first 10-15 minutes. And then we will start with the introduction of the income tax, which is there for your exams. So the batch will be run for approximately 225 to 230 hours. Okay, effectively excluding all your breaks and all whichever we are going to get in between. In the batch, you are going to get 5 books as you already have all of them. I'll just give you the brief up about all the 5 books first of all. You have got 3 textbooks, volume 1, volume 2, volume 3, that contains the subject in the form of bare act, that is Income Tax Act, with an explanation for the same, the way it is given in your ICI material. So that contains subject which is similar to what is there in your ICI material, content which is similar to what is there in your ICI material, which is there in volume 1, few topics are there, volume 2, few topics are there, and the rest of the topics, mainly international taxation, which is there in volume 3. Now, if you see the ICI material, which is not yet released, I guess, completely for your exams, not completely released, they are releasing in parts, module 1, module 2, total there are 4 modules of ICI. There are around 2,500 pages of direct tax. I'm not trying to scare you. Okay. I'm just informing you that there are 2,500 pages which is there in ICI material. Okay. For all the 4 volumes taking together. Now, honestly speaking, as a student, I have to think, I have to sit on that bench and think from your perspective. Technically speaking, it is impossible for a student, no matter how intelligent you are, to revise that a day before what? Exams. It is impossible. Okay. No doubt we are going to learn everything in detail, but at the same time, we need to know how to consolidate the things. That is more important a day before exam. You might have realized that you would have studied so many things in CA Enter, but the day before exams, you are not able to consolidate the things, but somehow you cleared. I don't know how. Okay. Right? So in final CA, the things are bigger. You know that you have learned AFM, how big the subject is. You would have already heard about DT, that how big subject the DT is. DT and FR, these are two are the biggest subjects in your CA final syllabus. In group 1, FR dominates group 1 and DT dominates group 2. So we should have a plan that how we are going to consolidate the subject a day before exam. If we don't have that plan, then no matter you sit for the lectures for 200 hours or 500 hours or 1000 hours, it doesn't matter. At the end of the day, are you able to revise the subject a day before exam? That is something which we need to know. For that, what we are going to do, we are going to learn from this book, no doubt. In detail, I am going to explain you everything from the exam perspective as well as from practical perspective, not only from exam perspective. Because ultimately, direct tax is a subject which I guess at least 50% of the students in this class would like to practice in future. Okay. That is the subject which is very practical in life. So as a student, you should not only learn from academic perspective, but also from practical perspective. I am also a practicing chartered accountant. I have a firm in Bombay, a partnership firm, CA firm. So we have a practice also over there. So I will also share my practical experience with you all with respect to direct tax. So how to consolidate the subject? No doubt we are going to learn in detail, but at the same time for consolidation, we have given you one color concept book. If you can see that book, every day you have to bring as of now 2 books. Volume 1 book, and you don't carry all 5 books as of now. I will let you know a day before which books to carry on the next day. Okay. For the next 1 week at least, you have to carry your volume 1 book and your color book. These are the 2 books you are going to carry as of now. Don't carry volume 2. Don't carry volume 3 as of now, and don't carry question bank also as of now. Question bank, I will let you know when we are going to have a question bank session. So that color book, which is approximately 380 pages, that covers the entire syllabus in detail. Entire syllabus. So a day before exam, and also for your revision purpose, after you are done with the classes, every day you might be revising for half an hour or 1 hour. You can directly revise from that color book. I'll tell you these pages we have done in class today, and this much you have to recap. Just make sure one thing that you are running out of time. So make sure one thing that in the next 45 days, which we are going to do direct tax over here, you make sure that at the end of the 45 days, along with me, you also complete your direct tax studies with me only. So that you don't have to give extra time for direct tax later on after 2 months. So you should make that habit. Now, only you can do that. I cannot come to your hostel and check whether you are revising or not. Okay. That you have to make a discipline, which I know that, which I have heard about your batch from Sridhar sir and other teachers also, that you guys are very disciplined. Okay. So I hope that that continues for, I don't know, that is because of the fear of Sridhar sir, or that is coming directly from inside yours. That I don't know. But I hope that that you will continue for my batch also. So just make sure that whatever we do, whatever we will be doing for 7 hours, if you give 1 hour every day, honestly speaking, you'll be able to recap everything properly. We are going to cover 100% syllabus. You don't have to see anything here and there. Many people don't cover the CA inter syllabus and CA final. I'm not going to do that. We are going to cover everything. Whatever was there in CA inter also, which is there in CA final also. We are going to cover those topics also, like chapter 6, deduction, set off and carry forward. Okay. Small topics, IFOS and all these were there in your CA inter, but it is there in CA final also. So nothing will be left out of your book also. Everything is covered in your book. So for recap purpose, for revision purpose, you have to follow your color book. Okay. In class, we are going to do this detailed book. We are going to learn the subject from this detailed book. This detailed book does not cover all the topics, let me tell you. It only covers topics which requires great amount of interpretation in the syllabus, like business and profession, like assessment procedure, search and seizure. These are topics which requires great amount of interpretation. So that is the reason we have put bare act in the book, so that you come to know how the law is drafted. Because what is going to happen? Unfortunately, you are the most unfortunate bunch of students in this country. Why I am saying you? Because you are going to learn the old income tax law now, correct? Yes or no? Unfortunately, within a year, what is going to happen? The new income tax law is already introduced, correct? Which is going to be applicable from financial year 26-27. So, what shall I say on this now? You have to learn as per the old income tax law, but I have gone through the new income tax law once. I've come to know that, don't worry, they have made only cosmetic changes in that. They have not made any great change in that. They have changed the section numbers and all. As far as the content is considered, more or less it is same only. Don't worry about it. Okay. So even if you learn this old income tax law for your syllabus, this will equally help you to understand the new income tax law also when you learn from your side. So don't worry much about it that the subject is changing. It is not like 8 years back when GST was introduced. GST was altogether a different law. It was not a replacement of the earlier laws. But this is almost similar with removal of some irrelevant sections and change of some section numbers. Apart from that, the content is almost same only. So don't worry much about it. So you have to revise the subject from your color book. Now, there are 3 steps in clearing your CA final direct tax paper. First, obviously, is to understand the subject logically, which we are going to do in the class. Second, you have to recap. I will try my best to recap also in the class. You also have to do it at your end, at home. And the third most important thing, without which there is no use of learning the subject. No matter how many hours you learn, if you don't do the third thing, which I'm going to say now, it's of no use. And that is practice of questions. We need to have sufficient practice of question in the class. For that purpose, you have been given one question bank. You are not going to bring that question bank for the next 3-4 days at least. We will complete one chapter first and then we will start the questions. In that question bank, what all things are covered, let me tell you. That covers all the ICI material questions, okay, which we are going to discuss in the class. I'm going to explain you in the class. But the preference I'm going to give you first, you will try the question first, okay. I'll give you 5-10 minutes for every question. You try. And then I will come and I will discuss with you all each and every question in the class. No homework, etc. I will be giving you all. Okay. So first of all, we are going to do all the ICI material question chapter wise. Once one chapter is done, we will do the questions of that chapter. Like for example, in business and profession, we are going to start with business and profession in today's lecture. So after you are done with business and profession, we are going to do the questions of ICI material of business and profession, which are around 30 to 32 questions. We are going to solve all of them in the class. Likewise, we are going to do for all the chapters. Once all the chapters are done, maybe around by the end of 30 to 35 days. Then we are going to do one very important session, which you would have not done for any subject so far, but I feel that that is one of the game changer for my students across the country. And that is, we are going to do 8 attempt RTPs in the class, 8 mock test papers in the class. We means first you, then I. Okay. First you will do. That is the reason I am insisting that you have to revise every day, because otherwise you will struggle in all those things. 8 RTPs are there in your book, in your question bank, including the latest September 25 RTP is also there in that. Okay. 8 MTPs are there in your book, mock test papers, and 8 exam papers are there in your book. Total 24 papers are there in your book, which all of them are updated as per the latest Finance Act. Okay, I have changed all the dates. I have made all the amendments in the booklet, and I have given you completely amended booklet. We are going to solve all 24 papers in the class. Okay, all of them, but that will be done at the end of the subject, not now. The reason why we do that, because solving questions individually chapter wise is a different thing, and solving questions when it mix up with other chapters, because ultimately exams are going to be of all the chapters together. It is not going to be of one chapter. Okay, this attempt you are going to do PGBP exam, next attempt capital gains. It is not going to be like that. So you are going to give one day, you have to revise, correct? One day, and 3 hours you have to write. Okay, ultimately what matters is that only. How do you revise in one day, and how your mind work in 3 hours? So I will try to train you in such a way that in first paper you will struggle, in second paper you will struggle, in third paper you will struggle, 4, 5 papers you will struggle. It's okay. You struggle in the class rather than struggling in the exams, or rather than struggling in the study leave. After 5 to 6 papers, you will gain some confidence. Yes, we are able to answer the question, sir. After 10 to 12 papers, you will be becoming slightly perfect. And after 20 to 22 papers, you will be completely perfect. Obviously, after that, you will solve at your end at home. Okay, when you go for the study leave. Once or twice, you will do that 24 papers. It will almost cover 70 to 80% of the exams. This attempt, all those who have done those 24 papers of my last attempt students, 80% of the paper came from there only. Because even ICI cannot think beyond that. How much they will make a new question? Okay. In 24 papers, there will be more than 200 questions. Okay. Now, out beyond that, even ICI cannot think what new things they can make. Yeah, the law is law only, correct? They cannot make a new law now for asking to fail a student of CA final, correct? We want to fail a student, so we will ask something else only in direct tax. That they cannot do. Even after that, I make you a commitment here itself on the very first day. Right now, I have paper till September, correct? Obviously, till your exams, one more attempt will come for Jan 26, correct? We will discuss that also, okay? That RTP also I will discuss, but that will be done online, okay? Because I will not be physically over here. So I will share the video with you all with respect to the RTP Jan 26, mock test paper Jan 26, and the paper of Jan 26 whenever it will be coming in the month of Jan, and whenever the ICI will bring the suggested answer. That also I will be discussing with you all, don't worry. Okay, so before the day of exams, anybody who is giving exam in September 26, for example, out of this or out of the students who are listening in recording, for them, I'll be discussing till September whatever is the RTP, MTP, apart from whatever is there in your books. Okay, so that is one of the most important factor that you need to consider for all the subjects according to me. You need to understand the psychology of ICI, what type of questions they ask. In question number 1, what they ask. In question number 2, what they ask. In question number 3, 4, 5, 6, what is the pattern of the paper. If you are used to that, and if you go in the exam with the used to manner, I know exactly what is going to come in which questions. So you'll be very familiar with the paper. You'll feel confident about it. Okay. So 3 things we are going to do in class. The 4th thing, I think so your campus is doing for you all, that is the test series program and all you have been following over here. And for online students, I will address all those who are not in Guntur and all those who are my online students. For them, what has to be done for test series, I will let you know later on. So without wasting any further time, let's start with the subject now. Today we are going to have some introduction of the income tax. You have done income tax in your life at 2 places, one in your CA Inter Secondly, you might have done, some of you might have done in your articleship. I am not assuming that you have done it. Prakash sir has told me that don't assume that they have done, all of them have done articleship in income tax. Obviously, all of them might have not done articleship in income tax. So I will teach from the perspective as if you have not done articleship in income tax, you have done in other areas. And I will teach according to that. So let us start the subject, introduction of the subject. One more thing, few more things that I would like to say before we start with the subject. For revision, you all are giving exams in May 26 and onwards. All those who are sitting over here are giving in May 26 and other students might also give in September or Jan 27. For your revision, one more thing that I always do, and that is I put a revision video for your entire subject on my YouTube channel. It will also come on the channel of Mastermind also. On my entire subject will be revised on YouTube in full English, okay, in around 15 to 18 hours, okay. So whenever you are free, you can watch that video. For May 26, I have not put yet. After the batch completes, I'll be putting after that, okay, not now. In the last 3-4 months, we do that particular thing. So as of now, if you want to watch, you can watch the old revision videos also, okay. I'll tell you where it is there exactly, so that if you don't want to revise at your end, if you don't have time, so a chapter which goes for around 40 hours can be revised in 2 hours on YouTube. Okay. We have technology, so we can make use of it. So let us start the subject now. Income Tax Act. We will be keeping the session very interactive. Wherever if required, I'll be asking you some question. If you can answer, well and good. If you don't answer, that's also, it's okay. My question to you all, first question to all the students who are listening my lectures, whether it is there in face-to-face or online or in recording, you can just think at your end what question I am asking. You can answer yourself. When income tax law was introduced in India? Now you will say, sir, you have yourself written on the board, sir, and you are asking such a silly question. Okay, I will not ask you silly questions ever. Okay, you will realize that in the next few days. My questions will have some hidden information. When was the income tax law introduced in India for the very first time? Any idea, online students? Please. No idea? No idea? None of you knows? Are you can make a random guess, please. When? When was Income Tax Act came in India for the very first time? Obviously, it is not 61. Correct, na? Otherwise, I would have not asked that. Correct. Please. No idea? Okay, let me say. The Income Tax Act came in India for the very first time in 1860. It was brought by a British viceroy. Who brought it? A British viceroy brought it to loot India, which is continued till 2025. Okay. Okay. Then they reintroduced it. Let me tell you the entire order. Then people agitated, people protested against it, so they removed it. Okay. Then they again brought in 1874. Then again people agitated, they removed after 2-3 years. Then 1884 they again brought. They were also very adamant. They used to remove for a few years and then they again used to bring. Then again 1886, then 1918, then 1922, and then we got independence in 1947, obviously, and then in 1961, after 12 years of independence, we made our own income tax law in 1961, and now the government felt that this has become very, what? Old, so they have now introduced what? 2025 income tax, which we are not going to learn that, okay? We are going to learn the income tax which is there in 1961. Most of them are similar only, don't worry. Again and again, I will tell you, if required, I will also show you the provisions of the new income tax law sometime just to have you some idea that how the things are similar. To what extent they have copied? The extent which they have copied, even you will not copy in the exam. Okay. You will also have some shame that you should not copy exact word to word, correct? There has to be some changes in your answers when you copy from somewhere. But the government does not have any shame, sorry to say. So the Income Tax Act came for around 1, 2, 3, 4, 5, 6, 7, and this is the 8th time we are bringing income tax law in India. I have a question to you. If tomorrow our finance minister feels that the taxes which she collects is not sufficient to run the country, okay, can she bring a new taxation in India in the next budget? Altogether a new taxation. You have never heard about such kind of tax. Like, I'll give you an example. Breathing tax. What? Breathing tax. If you breathe, you have to pay tax. Okay. Now, I have heard very recently in Bangalore, they are going to bring some tax. I don't know whether it is true or not. If you go in a car alone, is it true? I'm not aware of it. Is it true? If you alone travel in your car, personal car, you have to pay tax. You cannot travel alone. You have to tell 10 people to come with you if you want to go to market and buy something, okay? The reason, because the traffic in the Bangalore is too much, correct? Anybody from Bangalore would be knowing this, correct? So any kind of new tax can come in the country next year if the current taxation system is not sufficient to honor the commitments of the government. So my question is very clear. Can they bring a new taxation in the next year? Maybe. They can. You have to answer, please. You cannot be silent. No, they cannot bring. The answer is mixed. Some of them are saying yes. Some of them are saying no. What is your answer? They can bring? Okay. Who said no? Why they cannot bring a new? Excellent. That is what I want to hear. They cannot bring any new taxation law based on their wish, correct? Every taxation law, every taxation, every duty, if they want to bring in India, our constitution should give them power. The government does not have an inherent power to bring any taxation law. The constitution of India will give them power. The country is run by a constitution. That is the supreme law of this country. Where it is written, sir? It is written in Article 265 of the Constitution. In our Constitution, Article 265 says that if the government wants to introduce any new taxation or duties, they should be empowered by the Constitution. There has to be a power in the Constitution. Without that, they cannot bring any new law. So what he said is absolutely correct. What you said is wrong. They cannot bring any new law, new taxation, breathing tax or any kind of tax just because they want to raise more money. They cannot do that. So that is the reason our constitution is divided into how many parts? Our constitution is divided into how many parts? How many parts? 3 parts. The first part is called as, we all have learned about in our school or college somewhere at least. Okay. Union list. Second part is called as state list 2. And third one is called as concurrent list 3. Pay attention. Today's lecture for 1.5 hours to 2 hours, whatever it is going to be only to understand the basic structure of the taxation law. We will not start with any topic today. We'll start in the evening. Okay, not now. First of all, you are learning so many laws in your syllabus. You have learned so many laws in your CA Inter, in your law paper. In final CA, you are learning direct tax, you are learning indirect tax. You should know the basic structure of how the law is formed. Okay. So the constitution should give you the power to bring new taxation law. Otherwise, you cannot bring any taxation law in this country. Income tax is introduced in India and it is levied on all of us because there is a power from the constitution. I hope everybody knows income tax is collected by which government? Central government. And central government is governed by union list, correct? Yes or no? Central government is also called as which government? Union government, correct? So it is entry number 82. Which entry? This gives the power to the government of India to impose what? Income tax. If this entry would have not been there, the government cannot impose what? Income tax on you. It is not possible. It is only because of this entry that the government is able to impose income tax. What is written in this entry, sir? A very simple sentence. You need not have to write down anything. Everything is there in the book. I will read also after we are done with the discussion. Okay. Whatever is not there in the book, you have to write down, and that I will tell you, and I will give you time also to write down. Entry number 82 says that income tax shall be imposed on any income except agricultural income. This is what our constitution says. Except agricultural income, the government of India can impose income on any damn kind of income, whatever they feel like imposing, they can impose. Over the period of time, they have imposed income on many different kinds of incomes, which we are going to learn today and in the evening session also. So this is the entry which gives the power to the government to impose income tax. If this entry would have not been there, they would have not imposed the income tax. Similarly, Customs Act, you might have heard customs. Custom duty is collected by which government? Central government. Should there be a power in the union list? Yes, there is a power in entry number 83. Where? Entry number 83. In indirect tax, you will learn this. Okay. Excise law is there in this country? Excise? Not there? Only for few items. Correct. After the introduction of GST, the scope of excise has reduced. Only for few items like petrol and all, correct? Yes, liquor, etc. Entry number 84 gives the power to the central government to impose what? Excise duty. So, if these entries are not there, the government cannot impose the tax. They cannot make a law. For that, they need to have a specific power in the constitution. Okay. Like that, there are many other laws which are imposed till entry number 96. So entry number 82 to entry number 96 are different kind of taxation and duties and cess, different kind of levies which the government impose on us. After that, the government is tired now. So they have put one last entry, entry number 97, which is called as residuary entry. What it is called as? Residuary. This entry says, if any tax or duties which is not enumerated above, which is not mentioned above, the government has the power to impose taxes through what? Through this residuary entry. Let me ask you one question. Income tax we have heard, excise we have heard, income tax so we have learned also in our life. Okay. Excise you might have not learned in CA Inter. I guess you have not learned. You have done GST directly. Have you heard about health and education cess? Yes. Is that also a tax? Is that also a levy by the government? Where it is written? Should there be a power? Where it is written? There is no specific entry for the same. It means the government is imposing that through what? Residuary entry, entry number 97. Are you clear? Is there a tax called as securities transaction tax? Please say. Yes. Where it is mentioned? Not mentioned. Not mentioned in entry number 82 to 96. It means the government is imposing that through what? Residuary entry 97. Okay. Sir, what difference does it make? You will ask as a student, what difference does it make whether you have a specific entry or whether you have a residuary entry? What difference will it make? Anyways, they are collecting taxes in both the cases. For income tax, there is a specific entry 82. They are taking taxes from us. For health and education cess, for securities transaction tax, there is no specific entry. Still, they are taking taxes from us. So, what is the difference? The difference is as follows. Pay attention. For any specific entry, the government has the power to make a separate law. If there is a specific entry, there will be a separate law. There will be a separate department for that particular law. Okay. There will be a separate board for that particular law like CBDT. Yes or no? But if the levy is a small levy, Securities transaction tax. It's a small levy, correct? 0.01% on purchase and sale of your shares and securities, correct? Health and education cess is a small levy of 4%, correct? There is no separate law. Then how it is imposed, sir? How it is, under which law it is imposed? Let me tell you. There is no separate entry for health and education cess. There is no separate entry for STT. There is no separate entry for CTT. You have heard CTT? Commodity transaction tax, which is imposed on trading of commodities in MCX, right? There is no separate entry for them. All of them are governed through entry number 97 only. No separate entry. Which law is there, sir? The law for these small items are the relevant Finance Act itself. What? Like STT was introduced by Chidambaram, P. Chidambaram, in 2004 Finance Act. When? So if somebody asks you today, what is the law of STT? What will you say? It is Finance Act 2004 itself. Are you clear? There is no separate law for STT in this country. Okay, it is levied through Finance Act 2004. Health and education cess is introduced by different finance minister in different years. Earlier it was 3%. Now it is 4%. Earlier it was, no, there was two parts of health and education cess. 2% was primary health and education cess. 1% was secondary health. Then they removed in 2017 and they put only one, health and education, 4%. So the relevant Finance Act is the act for the same. Are you clear? For that, there is no separate law. There is no separate department. If you don't pay health and education cess properly on income tax, who is going to catch you? Please tell me. Is there any separate health and education cess department? Who will catch you? The income tax department will take care of it. Okay. So the makers of the constitutions were very much aware in 1949, considering the next 50 to 100 years, that just stand in 1949 and think, will you be able to judge that what all taxation can come in the next 50 years? We cannot judge that. Okay. So they have put one residuary entry for the sake of collection of small taxes. But yes, if you want to make a revolutionary tax in country, if you want to bring a new law, a very big taxation law, which will collect lakhs and crores from the taxpayers, then you cannot collect through residuary entry. That is not possible. Then you have to make a separate entry in the what? In the constitution. And for that purpose, I'll just tell you, GST was introduced in 2017, correct? Is it a small law or a revolutionary law? Revolutionary law. So whether the government of India would have made amendment in the constitution first? Tell me, please. Yes. So in September 2016, first of all, they changed the constitution. They have put one specific entry for GST. Okay. I will not tell you the number. Let the respective teacher tell. Okay. Otherwise, you will answer him. Okay. Let him ask you. Whomsoever will teach you. So they made first amendment in the constitution by putting a specific entry for GST. They gave power to the government, and then the government introduced what? GST in 2017. Before GST, service tax was there. You are aware of it? What was the name of that law? Any idea? What was the name of that law? No idea? You might not know. Obviously, you have not learned that. So no, there was no separate law for that. That was also levied through relevant Finance Act. That is through entry number 97. I'll tell you the history in a while. Okay. Why so? Why it was done so? Okay. I'll tell you the history in a while in today's session only before 12 o'clock. So the point I'm trying to say is, for any taxation law to be imposed, there has to be a power through constitution. Without the power through a constitution, the government cannot impose any tax. Similarly, you have what? You have state list. Can you give me some examples which the state government collects as a tax or duties? Huh? Entertainment tax, yes. Octroi is kind of, it's a concurrent matter which both the government takes care. Okay. State excise, yes, on liquor, etc. Correct? What else? Property taxes? Stamp duties on purchase of properties. What is the stamp duty in Andhra Pradesh? I don't know. In Maharashtra, it is 6%. How much it is over here? Any idea? No idea. Just try to find out and let me know. So the stamp duty on purchase of properties are also paid to the respective state government. Okay. So there are few taxes which goes to the state government. Most of the big taxes goes to the central government only. There are few taxes which also go to whom? Concurrent. Concurrent means both the government will share. Now, let me tell you one very important factor, that in these two lists, there is no residuary entry. The residuary entry is only where? Union list. The residuary entry concept is not there in the state list and the concurrent list. Okay. So, for any government to impose any tax, they should have a power from the constitution. So, once they get the power, what is the next step? No. After you get the power, you directly go to parliament. Who will make the law? You have to make a draft first. Okay. The government will set up one committee. Okay. Expert committee. They will make a draft. Correct. They will review the draft. They will give the draft to the people of this country. They will give the draft to various esteemed institutions like ICAI. Okay. They will give the draft to big CA firms. Correct. They will give the draft to corporates also to review it. They will all give their valuable suggestions. And after that, the government will finalize the draft. Once it is finalized, the government will take the draft where? Tell me. Parliament. And they will lay down the draft in the parliament. In parliament, there are two houses, Lok Sabha and Rajya Sabha. First, they will lay down where? Lok Sabha. And then they will lay down where? Rajya Sabha. All these are there in your book also. Don't write. Okay, I'll read better. If anything which is not there, I will let you know that you have to write it down. First Lok Sabha and then Rajya Sabha. Why so? See, in my lectures, I am always going to ask you many questions every day. Please, you have to think. The more you think, you will become a good student and also a good expert in future. Direct tax is a subject where every line has logic. Nothing has to be by-hearted. Nothing. Every line will have logic. I will tell you everything logically only. Nothing will be done except the rates of the tax, etc. You have to by heart. Don't ask me why 5%. Why not? Why not 5.5%? Huh? Please. Then I will say sorry. Why first Lok Sabha and then Rajya Sabha then? Before that, we need to know what is Lok Sabha and what is. Then you will be able to answer that question. So who sits in Lok Sabha? Huh? Member of Parliament? We have elected them. Madam, then who have elected madam? You are saying no, then from where they have come? Pakistan? Huh? Who have elected them? Member of all those people who sit in Lok Sabha. Where? Lok means what? In Hindi, people. Right? In Hindi, Lok means people. We have elected them, okay, in the election of Prime Ministership election, 2024 one. Okay. That is the union election. Who are there in Rajya Sabha then? They are also member of parliament only. But who have nominated them? Lok Sabha members have nominated them. Within Lok Sabha member, there is an election going on. Okay. Like for example, Sachin Tendulkar was a member of parliament. Jaya Bachchan is a member of parliament even today from Samajwadi Party. You might have heard from Uttar Pradesh. Okay. So whether these people, Sachin Tendulkar and Jaya Bachchan, even our beloved Vijay Mallya was also what? He was a member of parliament. But whether these people have fought any election? Have you heard about them? No, they have not fought an election. The respective parties have nominated them to be part of what? Rajya Sabha. Okay. Nirmala Sitharaman has also not fought the election, for your kind information, correct? She has also been nominated by the government. Okay. So, Lok Sabha is those members of parliament sit where whom we elect. And Rajya Sabha is something where the member of parliament elect them. The parties elect them. Income tax is a matter of money. Will it matter to all the people of this country? Please tell me. Yes. If any taxation law comes, it will impact every citizen of this country, correct? So first it should go through whom? Lok Sabha, to whom we have elected, correct? If they give a green signal, yes, it is correct. If they give the majority, yes, it should be passed. Then we should go through Rajya Sabha. Therefore, I'll tell you one very important factor. First, Lok Sabha, then Rajya Sabha. This is only for revenue matters. Which matters? For revenue matter, you have to follow this order. There are many non-revenue matters which comes in the parliament every day. For example, company law. If the government wants to bring a new company law, okay, company law 2013 was recently introduced. Before that, it was 1956. It's a revenue matter or non-revenue matter? Non-revenue. It does not collect taxes from anybody. It is only for governance, correct? So, non-revenue matter will be first laid down where? In Rajya Sabha, and then it will be laid down where? In Lok Sabha. It is not that every law will first laid down where? Because non-revenue matter. Are you interested, except for CA final syllabus? Are you interested if there is any change in the company law syllabus? Please tell me. Are the majority of the citizens of this country interested in company law syllabus? No, we are interested because we are CA students. We are a very small bunch of students, correct? Considering the population of this country. But otherwise, 99% of the people are not interested in what? What is happening in company law? Whatever they want to do, they can do. Therefore, non-revenue matter first goes to Rajya Sabha and then it goes where? Then it goes to Lok Sabha. After you get majority over here, then you have to do one last thing, and that is you have to go to the President of India and you have to get one approval of the President, which is technically called as what? An assent. Once that is done, the government will notify the law in an official gazette, correct? And then the law will be applicable from a particular date as mentioned in the law, okay? So every law will go in the same process that I have told you. So here we have now what? The Income Tax Act 1961, in which there are 298 sections, 23 chapters, and many other things, subsection, clauses, subclauses, etc. Okay. Apart from Income Tax Act, there is also one Income Tax Rules. Income Tax Rules 1962, yes, correct. What is the use of a rule? In GST also there are many rules, correct? And VAT rules, credit rules, input tax credit rules, etc. So what is the use of a rule? Rule will govern a law. For governance of the law, rule is important. For example, income tax law will tell you when to file the income tax return. Okay. But the rule will tell you how to file the income tax return. Which form has to be applied? ITR 1, ITR 2, 3, 4, 5, 6, 7, which ITR? So the rules will be governed by whom? The rules will be governed by the government of India. If any act has to be changed, it has to be changed in the parliament. But if any rule has to be changed, that will be changed directly by whom? By the government, central government. And for us, central government means CBDT. Who is central government for us? CBDT has been given the power by the finance minister to make changes in the income tax rules. So the hierarchy goes like this. What is at the top? At the top, constitution. Constitution gives power to make act. And the act gives power to make what? The rules. In Income Tax Act itself, in section 295 of the Income Tax Act, it tells that the central government has the power to make what? Rules. And therefore, they have made the rule what? The income tax rules 1960. CA final direct tax is not majorly governed by rules. Very few places you have to learn some kind of rules. Otherwise, 99.9% of the places you have to learn income tax sections rather than rules. Rules are not important for your CA final syllabus. But GST is more governed by rules. In GST, rules are more important than the act. There more questions come from rules. Anyways, now let us start with our first section. What I said you so far, I'll just have a recap of that. You can also help me to have a recap. That if you want to make any taxation law, the power should come from where? Where it is written. Article 265 tells you any duties, taxes government can impose only if there is a power. Okay. And then the constitution is segregated into three parts. Union list, state list and concurrent list. Union list covers what? Central government matters. State list, state government matters. Concurrent list, both the matters. Okay. Then comes union list. Which entry gives the power to make income tax act? Entry number 82. The government can impose income tax on any income except agricultural income. You can impose on any income. Perfect. Then entry number 83 talks about customs. Entry number 8, you may not remember. You may not remember that. That is just for your knowledge. Okay. Not relevant for exams. After the entry is there, the next step of the government would be to make a draft. After that draft, they will lay down that draft in the Lok Sabha first and then in the Rajya Sabha. And after that, they will take that to the president for approval and notify, and the law is ready. The first section is there in front of us. What is the first section of every law in this country? What is the name? What is the first section? Name of the act? Short title? Perfect. It talks about short title. That's it. Only short title? Extent and applicability. What else? And date of commencement. Yes, three things will always be there in any law first section. Short title, extent and applicability, and commencement. We'll talk about all three of them step by step. Okay, first, short title. What is the short title of this law? What is the short title? What we are going to tell this law in short. So the law says in first section, this law may be called as the Income Tax Act 1960. It is written in the very first section. If you get time, you can go and read the Bare Act whenever you have a Bare Act and read it from the first section. The first section will always say in this law that this act may be called as a Income Tax Act 1961. Now, once I was just thinking that this is the short title. Then what is the long title? There has to be some long title for every short title, correct? Your parents will directly keep your nickname or what? Huh? Your parents will not keep your pet name directly, na? They'll keep your full name and then they will call you something, na? Correct? So what is the long name of this law? So you open the income tax law for very first page. It is written over there, the full name of this law. The full name of this law is, it is an act to consolidate a law relating to income tax and super tax. This is the entire name of this law. Henceforth, we are going to call this as what? The Income Tax Act 1961. At many places later on, we are going to just say this act. What? This act, rather than saying the Income Tax Act 1961 also. Even in the law, they have used this word under this act, under this act, under this act. That is much more than sufficient. You may not say this entire name again and again. Okay. Second thing which I need to say, when did this law commence? So this law commenced from when? 1/4/1962. Okay. From when it commenced? 62. The law was introduced in 61, but it was applicable from, because income tax is more driven by assessment years. Which year? What is written on your ITR? Assessment year, correct? When you compute an income, you compute income for a assessment year, not a previous year. Okay. So income tax was applicable from previous year 61, 62. Okay. But it was computed in assessment year 62, 63. Therefore, this law was applicable from 1/4/1960. Now coming to the middle portion, the most important one to discuss over here. Extent and applicability. Where is this law applicable? Whole of India? What about J&K? Huh? It is applicable in J&K. Why? Article 370 is removed. That everybody knows, correct? What about when it was not removed before 2019? It was not applicable in J&K? Tell me now, please. Not applicable, madam? Not applicable? I'm just asking, income tax law was applicable or not before 19? At that time, Article 370 was there. We will speak about Article 370 today. Okay, what was there, how it was removed. Okay. Just last time I'm asking, before 2019, was income tax applicable in J&K? Confident? No? It was. Okay. It was applicable from 1961 itself. Okay. So let me tell you. So this is applicable to whole of India, including J&K. They used to write this sentence earlier. Now they have removed this also. Okay. Now they used to write this earlier. Whichever law excluding, they used to write excluding in the bracket, and whichever law they used to mention including. Okay. But now they have removed that also. No need to mention, because that's not a case only now. It's not relevant only. 370 has been removed. So I'm just removing this from here. Now we will talk about whole of India. What will India include? The word India is defined under income tax law. And where are definitions generally? In which section? Section 2. Okay. So section 2, clause 25A defines what? India. Now what does India include? First of all, India includes the huge landmass of India. Okay. All the states, including all the union territories. Okay. How many union territories are there? Huh? 9. Jammu and Kashmir and Ladakh has become 2 union territories now. Okay. Correct? Tell me, sir, all the union territories. Puducherry, correct? Delhi, Chandigarh, Lakshadweep, Andaman Nicobar, Dadra, Nagar Haveli, Diu Daman, you count as one only? Okay, then it is fine. Then it is 8. Okay. What else? Ladakh, Jammu and Kashmir. Okay. All these union territories are also part of what? India only. Whether you earn income in any of the states or any of the union territories doesn't matter. Apart from that, this is the landmass, for example. Okay. Now, after the landmass, you have what? The water. No, not 200. Wait. Up to 12 nautical mile, it is called as territorial waters of India. What it is called as? Up to 12 nautical miles, it is called as territorial waters of India. That is also part of what? India only. Whether you do any activity over here or here, it is as good as you are doing in India. And you will be liable for what? Income tax in India. Okay. And the third thing, land mass is over, territorial waters of India up to 12 nautical mile is over. Now the third thing is airspace above it. The airspace above the land mass as well as the territorial water of India is also part of India. Okay. If you earn any income in the airspace, that will also be part of India only. And now last part, pay attention please. Last part is there are many activities which are not done generally on land or near the shore. Okay. There are at least some activities which are not predominantly done year or year. It is done deep inside the sea. Okay. Mainly exploration of what? Oil and natural gases. Correct? So suppose some foreign company is exploring some oil around 160 nautical miles from the land mass of India. Okay. Now this particular oil company is not obviously doing the activity on land. So it cannot say that I'm in India. It is not doing activity in the territorial waters of India. Okay. Again, it cannot be covered in the definition of India. Correct? So the last part in the definition of India given by the government is up to 200 nautical mile. That area is called as exclusive economic zone. What it is called as? And the government has said that if you do certain specified activities, all activities are not covered in exclusive economic zone. On land, you do anything, you are liable to tax. In territorial water of India, you do anything, you are liable to tax. But in exclusive economic zone, the name itself tells you what? It is exclusive to certain activities. So in exclusive economic zone, if you do certain exclusive activities like exploration of oil, natural gas, then you will be what? Covered as a part of India and you will be liable for tax. So total there are 4 parts in the definition of India. Landmass, territorial waters of India up to 12 nautical miles. Nautical miles is nothing but miles only, but when it is measured in water, it is termed as a nautical miles. Okay. The distance is similar only. The way you measure on the road. Okay. The way you measure on the land. The same distance only is there. Third, airspace above what? The landmass and the territorial waters of India. Okay. And the fourth is exclusive economic zone for certain activities. All these are part of India, which is defined in the income tax law in section 225A. Now coming to that particular sentence, which you need to know as a student, that it is including what? J&K. I'll tell you the story behind it, why, what has happened and how the things have changed in the last 70 years over here. In 1949, when we got the 47, we got the independence. 1949, we got our constitution. Okay. And in the constitution, obviously entry number 82, 83, etc. These entries were there. In 1961, we brought our own income tax law for the first time. So in 1947, when we were getting independent, so J&K was not ready to be part of India. I hope you might be knowing these stories. So the government of India gave them a proposal that you be a part of India. We will make a separate article for you, Article 370, through which if any new law will come in India, it will not automatically apply in J&K. We will ask to the state government of J&K, then we will apply. Okay. So they agreed on this condition to be part of India. Okay. So after the independence, if any law was brought in Delhi, it was automatically applied to the entire country except J&K. For J&K, you have to pass that law in the J&K state government, state assembly. Okay. 1961 came. So the government of India was willing to bring a new income tax law in 1961. So the government has brought the income tax law in the Delhi. It was applicable to the whole of the country. Andhra Pradesh, Maharashtra, Gujarat, Rajasthan, everywhere it was applicable. So they asked the J&K people, would you like to be part of income tax? They said yes. And the income tax law is applicable in J&K from the very first day. Okay. From 1961. In 1962, the government brought customs law. The customs law was introduced in Delhi. It was applicable in the whole of country. Then they asked to the J&K people, to the J&K government, would you like to introduce that? They said yes. So the customs is also applicable in J&K. Okay. Then 1965, 70, 75, 80. In 70 to 75, Indira Gandhi has done some activity whereby she has broken Pakistan into 2 parts. You might be knowing that. Bangladesh was a part of Pakistan earlier. Okay, it was considered to be West Pakistan. East Pakistan, sorry. This is West Pakistan, the current one. So Pakistan was given two areas. One which is there currently, one which is Bangladesh, that was also part of Pakistan. So Pakistan was asking a big chunk of land from India at one place. So India said that we will not give you two land. We will not give you one land big. We will give you two separate land at two places. You take the north part little bit and you take the east part little bit. Okay. Indira Gandhi broke that Pakistan into two parts around 1975. And she told Bangladeshi people that you make your own country. Why you are dependent on them? Okay. So she broke the entire country. We supplied them the military. Indian government supplied them the military to break that particular nation. So then Bangladesh became a separate country and Pakistan became a separate. Only West Pakistan was which is now currently. So because of that, obviously Pakistan people, Pakistan government were very angry with India. Obviously, yes. After that, they started with terrorism activities and all after post 1975 and 80. And all this tension which you can see in the Kashmir is all big after that. Then 1990 came, 91 came, 92 came, 93 came, 94 came. Our beloved finance minister, ex-finance minister, Manmohan Singh ji. He introduced what? Service tax in the parliament. Through entry number 97. Through? Because he said that it's a very small law. We are introducing service tax only on 3 services. How many? Only 3, not all services. Today, every service is subject to tax, correct? We are only introducing 3 services. We will impose only 5% tax. It's a very small tax. Why we need to make a separate law for that? Why need to make amendment in the constitution unnecessarily? Amending is a constitution is not a small task. It's a big headache. You need 3/4 majority for that to amend a constitution. It's not easy to amend a constitution. So he said that I am bringing one very small law. Because goods are subject to tax, services should also be subject to tax. Why differentiation? So he introduced that law in Parliament in 1994 through entry number 97. No separate act. Finance Act 1994 was the law. Now the Manmohan Singh went to Kashmir and asked them, we want to introduce what? Will they agree? Tell me. They never agreed. Okay. Why? Because they believe that Indian government has disturbed their peace. Okay. By breaking what? By Pakistan into 2 parts. They believe that. That's what they believe. Because of that, they used to never listen to any central government proposal after that. Earlier, they used to listen. They used to never listen any central government proposal. 1995, 98, 2000, 2005, 2010, service tax is not applicable in the state of J&K. Not applicable. Then 2014 came, the government changed in India. Okay, the new government came. The new government has told that we will bring what? GST. Now the new government knows that we want to bring GST in the entire country. We want to bring in J&K also, correct? So the BJP government shake hands with the state government of Jammu and Kashmir and formed a government over there in 2015. Okay. Shall I go ahead? In 2017, GST was introduced. On 1st of July 2017, entire country GST was applicable except J&K. 2 months later, it was proposed in the J&K assembly also. It was passed there also, and even in J&K, GST is applicable. Now in 2018, the BJP government again broke the alliance with that local party. Okay. So we came to know that because of this, for 2 years they made an alliance with that party so that GST has to be introduced in that state also. Are you clear? Otherwise, they would have not been able to bring that GST in that nation, that state. Okay. So for some limited period, they shake hands with those people to whom they used to oppose earlier. Okay. But with an hidden intention. Are you able to understand or not? So immediately when the GST was introduced in 2018, they broke the alliance because in 2019, we again have to tell that these people are bad, etc. Because again, election is coming, correct? So in 2019, before the 2019 election, the government broke that particular alliance. But that was a very, very good master stroke, we can say, by the government to introduce GST. Otherwise, without the support of the state government, you cannot bring. But then in 2019, what happened, we all know. In September or August, I don't remember the exact month. It is, I guess, August only. August 2019, the Article 370 was completely removed. And after that, all the laws in this country are also amended by removing what? This bracket, whether it is including or excluding, everything is removed. Now all laws are, say, applicable to the state of J&K also. Okay. So this is the history of J&K. So this is what your first section is all about. We will read this much from the book. Okay. And then we will go ahead with the next part of our discussion. Come to the volume 1, page number 1. Whatever I am saying should be there in your books. If it is not there in your books, it's of no use. My story is not going to help you. What is going to help you after 6 months is only what is there in your hands. Okay. That is your books. That has to be very comprehensive. That should cover everything that is relevant for exam. So come to this page, page number of 1.1. Let's read this from here, all of you. Article 265 of the Constitution. Shall I read? Please don't talk. As per Article 265 of the Constitution, no law can be made to impose duties and taxes unless the Constitution gives the power. In Schedule 7 to the Constitution, it is segregated into 3 lists. First list is, this covers revenue as well as non-revenue matter from entry number 1 to entry number 96 as what? Specific entries, and entry number 97 to impose taxes and duties and taxes on those matters which are not enumerated in the above 96 entries. The right to make income tax act comes from entry number 82, which states that the income tax can be imposed by central government on any income except agricultural income. Now let me tell you one more thing. The state government has the power to impose taxes on agricultural income, for your kind information. If Andhra Pradesh government wants to impose what? Income tax on agriculture, they can impose. They are not imposing. Okay. So the farmers will agitate. Correct. But they have the power. For your kind information, I am telling you. The central government cannot impose only. They don't have the power only. State government have powers. But they don't impose because people will raise questions. Okay. They have power to impose it. The above entries include both revenue as well as non-revenue matter. As far as income tax is considered, it is a, therefore it would be first laid down in lower house, that is Lok Sabha, and then upper house, that is Rajya Sabha. Let's go to the next list. This covers the matters related to state government. Example, stamp duty, etc. Okay. The state list does not have any residuary entry. Therefore, any new taxes or duties which has to be imposed must be imposed through entry number 97 in union list. Example, STT, CTT, health and education cess. Further, these will be imposed through what? Through a relevant finance act. Concurrent list. This covers matter related to both government. Octroi duty. Now after GST, octroi not much relevant. It's a revenue matter. Education is a non-revenue matter. See, such an important factor. Education. Education policy is designed by whom? Government? Yes or no? Do you have a state board in Andhra Pradesh? Do you also have a center board, CBSC? So it's a concurrent matter. The government has given some powers to the state. Some powers they have kept in themselves. Correct? It's a concurrent matter. Both can make a law. Okay? So it's a concurrent matter. Now, once the power has been established through Constitution, the act can be made by government through parliamentary process. An act always comes below the, and it is divided into how many chapters? 23 chapters, and how many sections? 298 sections. The rules made by the central government will follow the, and therefore the rules can never override the act but should be consistent with it. The power to make income tax rules under Income Tax Act is given in which section? Section 295, and then starts with our first section, you want to read, you can read this much, okay? Only this much, which I am putting it in the box. Second point we have not discussed so far, okay? This is the first section. Read? Okay. Let's go ahead with the discussion now. Pay attention. Let's talk about now the charging section of Income Tax Act. What do I mean by a charging section? What do I mean by a charging section? It imposed the conditions for chargeability of tax, correct? What shall I do so that the government shall impose tax on me? I have to do something now. If I'm not doing anything, if I'm not earning anything, then obviously the government will not impose any tax on me. I have to do something. What is that something called as per the law? That is given in section 4 of the income tax law, charging section. Please don't see the books now, please. We will read it, don't worry. What does the charging section says? Pay attention on the board. I'm writing the charging section on the board completely. It's a very small sentence. It says total income of a person for a previous year shall be charged to tax in the next assessment year. This is what the charging section of income tax law has to say. Just 2.5 lines, that's it. But this 2.5 lines will take a lot of time for us to understand. It will at least take 2 hours to understand this 2.5 lines. We need to address each and every phrase over here. What is total income? We need to address this. Okay, wait. What do I mean by a person? We need to address this. What do I mean by the term? Previous year. What do I mean by the term? Assessment year. And what do I mean by the phrase charge to tax? Okay. Welcome to CA final. Okay. Yes. So one by one we are going to address. I may not go in the order in which I have written. Okay. 1, 2, 3, 4, 5. Few things I will discuss today. Few things I will discuss in the evening because I will not be able to complete everything in 45 minutes. Right now, I'm just discussing one very simple thing. That is what do I mean by charge to tax? This is previous year 25, 26. In this entire year, you are going to what? On income. And after the year ends, in the next year, that is in the assessment year, while filing the income tax return, you will compute your tax, correct? So the tax is charged here. The tax is charged or tax is assessed in the assessment year. One thing you please keep it in your mind from the very first day itself for you all in exams, May 26, September 26 till Jan 27. The previous year 25-26 is the relevant previous year for you. Assessment year 26-27 is the relevant assessment year for you. And Finance Act 2025, that is the budget which came this year. Okay. That is the relevant Finance Act year for you. Okay. Obviously, by the time you will give the exams in May 26 or September 26 or Jan 27, obviously you will have one more budget. Yes or no? You should not be interested in that. Okay. Academically, that budget will not be applicable for you. You should not see that budget at all. Whatever happens in that, ignore that. Okay. You are not supposed to see that budget. Anyways, that budget will be applicable to the new law. Correct? You should not be interested in that. Whatever is given in Finance Act 25, that is only applicable for your exams. Now, in the assessment year, we will compute the tax. In the previous year, we will earn income. In the assessment year, we will compute the tax. What is tax? Tax is a function of two things. When you multiply two things, you get tax. Total income into small things you have to understand over here. Okay. Small things. It's a very simple thing. Everybody knows that. But we need to do detailing of each and everything. Sir, what is total income? We will discuss that in the evening, not now, or at the later stage of today's lecture. Right now, I am interested in from where you get the rates of tax. Okay. From where you get the rates of tax? Please tell me. Finance Act. Okay. The relevant Finance Act will give you the rates of tax. So I'm just writing over here. The source for the rate of tax is relevant Finance Act. Which is the relevant Finance Act for us? 25. Now I have again I'm asking the same question, but in slightly different manner. Are all tax rates mentioned in the Finance Act? What, beta? Can you please say? Okay, only changes are mentioned. No, it's not like that. Complete tax rates are mentioned in the Finance Act, not only changes. If I'm an individual, correct? What is the individual tax rate as of now? Up to 2.5 lakh, no tax, correct? And in that also they have brought multiple regime, new regime, irritating, correct? So we will talk about all of them, don't worry. But in general, I am asking, we will be doing the entire chapter of tax rate separately later on. But there is some slab rates, na? 2.5 lakh, 5 lakhs, 10 lakhs. In old regime, what is the new regime? What is the slab rates today? They have changed that 3. Every year, the Nirmala Sitharaman like to change. She loves playing with the slab rates. Every year she changes. First year she brought new regime. At that time it was 2.5 lakh initially. 2.5 lakh to 5 lakh, 5 lakh to 7.5 lakh, 7.5 lakh to 10 lakh, 10 lakh to 12.5 lakh, and then 12.5 lakh to 15 lakh, and after 15 lakh it was 30. Then she changed 3 to 6, 6 to 9, 9 to 12, 12 to 15. Then she again changed 3 to 7, 7 to 10, 10 to 12, 12 to 15. Now this year she again changed. Every year she learns different table. This year she learned 4 to 8, 8 to 12, 12 to 16, 16 to 20, 20 to 24, and about 24. Okay. But the old tax regimes are same only for the last 10 years. Okay. Those are same. So the point you were saying, okay, only changes are mentioned, that is not correct. Okay. Full tax rates are mentioned. Complete. For individual, this is the tax. For HUF, this is the tax. For company, this is the tax. For firm, this is the tax. For AOP, BOI, this is the tax. For cooperative society, this everything will be mentioned in the Finance Act. My question is not that. My question is that, is there any other place apart from Finance Act where you can find out the tax rates? Which schedules? That is a part of Finance Act. The schedule is a part of Finance Act. Okay. So let me ask you the question in some other form then. Do you know that short-term capital gains are taxable at 20%? Under 111A section, have you heard about it? Have you heard? You know, long-term capital gains are taxable at 12.5%. Yes? Where it is mentioned? Where it is mentioned? Is it mentioned in some sections of Income Tax Act? Tell me. You know that lottery, casual incomes are taxable at 30%? Where it is mentioned? In the Income Tax Act itself. Are you clear? So there are how many sources of tax rates? Relevant Finance Act and the Income Tax Act 1961 itself. Are you clear? Now, the question is why they have segregated the tax rates into two parts. They should have kept everything at one place, correct? Now, let me tell you why they have done this two segregation. The rates which come over here, these are person-based rates. Which rates? Individual, HUF, firm, AOP, BOI, company, cooperative society. Are these different kind of persons? Yes. Whether these person-based rates, government changes regularly? Say now, please. Yes. Now, because they change this regularly, they have kept that as a part of Finance Act. Because budget comes every year, correct? Here, the rates which come now, those are income-based rates. Which rates? LTCG, STCG, lottery, horse race. Whether this changes every year? No. After so many years, the government has changed the long-term capital gains from 20% to 12.5%. After many years, even when I used to study around in 2008, 2009, at that time also the capital gain tax rate was 20% long-term. This last year they changed to 12.5%. After around 17, 18, 20 years, I don't know how many years. Lottery, since last 30, 40 years, it is 30% only. So the rates which doesn't change, okay, they keep where? They keep it as a part of act, so they did not have to amend every year, correct? But the rates which changes every year, they keep where? They keep it in the relevant Finance Act, okay? That is the reason they have segregated all the tax rates into two parts. Now, when you will see this budget, finance budget 2025, there are a lot of amendments that we are going to do. There are 40 to 50 different kind of amendments which are there in different chapters. We are going to do all of them one by one respectively. You will see that this budget is applicable for which previous year? 25-26. It is applicable for assessment year. Now, you will see different kind of amendments over here. First, at some places it will be written that this amendment is applicable from 1/4/2026. Okay. Now, what do I mean by this? It means it is applicable from assessment year 26-27. Are you clear? Yes. At some places you will see that this amendment is applicable from 1/4/2021. The amendment came in 25, but applicable from 21. So it is a kind of retrospective amendment, that it is retrospectively applicable from AY 21-22. Okay. So the amendment can be prospective. It can also be retrospective depending upon the intention of the legislature, what they want to do. Okay. So this is where from where you will get the tax rates. Now coming to the second part, what is total income? So what is total income? This is the place where we need to have some serious discussion. What is total income, please? One by one, I will not be able to understand. You say in chorus, please. One by one. If you don't answer one by one, I will start picking up, please. So you yourself decide. We make one group where you decide who will answer which question of sir. Okay. Otherwise, I will randomly ask. Please tell me what is total income. Your entire CA enter is at stake, huh? Please. You have done only one thing in your CA enter income tax. That is to compute total income. You have not done any other thing. Okay. CA final also it is important. The first question in your paper. First question, 14 marks. Compulsory question will be on computation of total income. Compulsory. Rest entire paper is optional. You can sit. Yes, it is optional. I'll tell you the paper format. The first question is compulsory. And out of next 5, you have to attempt any 4. So all other chapters can go in option. But computation of total income cannot go in option. You have to mandatorily do it. 14 marks. Please tell me what is total income. What is total income? Somebody has to take the charge. Yes, please. Somebody is saying. Please. What is total income? You are sitting on the first bench. Remember, I will ask you only first. Next lecture is not going to sit here. What is total income? It's a sum of all 5 heads. That's what you want to say. Okay. That's what most of the students tell me whenever I ask this question to any students in any of the batch, that it's a summation of all the 5 heads of income: salary, house property, PGBP, capital gains, income from other source. Okay. Now, that is not my question. My question is not how to compute total income. My question is, what is total income? Okay. What is total income? What do you feel? Is it defined in the law? Is it defined in section 2 or it is not defined in section 2? Not defined? So everybody is doing a calculation as per their own wish. Since he entered. It is definitely defined. It is one of the most important term of the entire law. It has to be defined in the law. It is defined in the law. So let's not make speculation. Let's see what the law has to say. Okay. It is defined in section 2, clause 45, and it is defined in 2 parts. Total income means an income referred in section 5 and computed in the manner laid down in this act. There are 2 parts in this. Let's talk about the left hand side first. So if you go and see section 2, exact these wordings are there in the law. Exact wordings. I have written the exact words of the law. Total income means an income as referred to in section 5. Now you will ask me, what is section 5? Section 5 talks about the scope of income. Which incomes come in the scope of income in India? You might have done one very simple topic in CA Inter where you used to make 3 columns. R and OR. Very simple topic it was, okay? Taxable, taxable, not taxable, correct? Have you done that or not? That topic was called as scope of total income, if you remember the name of the topic. Is salary taxable in India? Yes. Is capital gains taxable in India? Is house property taxable in India? IFOS? PGBP? Yes. But before saying yes, we need to know whether it comes within the scope of India or not. For example, only Indian people are not earning salary. An American person is also earning salary. An American staying in America, working over there, earning salary over there, receiving salary in America, is it taxable in India? No, it does not come in our scope. A US person doing business in US, selling product over there, manufacturing product over there, receiving the money from the customer in United States, is it taxable in India? No, it should come in our scope. So saying that salary is taxable in India, IFOS is taxable in India, capital gains is taxable in India is not correct. It should come into our scope first of all. And for bringing anything in our scope, we need to find out what the residential status of the person, correct? And you might have done in your CA inter syllabus little bit that if you are a resident, then world income is taxable. Have you heard this? Correct or not? But if you are a non-resident, then only which is in what? Accrued in India or which is received in India, only that much will be taxable. Otherwise, it is not taxable. Now, Samsung has opened a factory in India. They are manufacturing in India. They are selling the phones in India. Are they liable to tax in India? Yes, because their income is accrued in India. So, before saying that, let's be in a hurry and compute the tax. No, computation is not important. First, we need to see what you are computing comes within the scope of India or not. Otherwise, entire computation is a waste of time. Once you compute and then you come to know that it doesn't come in the scope, what is the use of that computation? First, you have to bring the income into the scope of India. For bringing into scope, you need to check two aspects. First, residential status. Second, accrual and receipt. If you are a resident, then close your eyes and say that it is taxable. If you are a non-resident, then check whether the income is accrued in India or not. It is received in India or not. We are going to do separate chapters on all of them. What is residential status? You might have done in CA Enter 182 days, 60 days. Yes, we are going to do in final also. It is a separate chapter in your book. Don't worry. We are going to learn the definition of what is accrual, what is receipt, what is deemed to accrue, what is deemed to receive. We are going to do all of them. Don't worry. But today, my objective is only to give you a brief introduction of the subject. I am not teaching you any chapter as of now. Okay. In respective chapter, you are going to do all these things. So, total income. What is total income? I asked you, most of the students start computing the income. Computation is a secondary part. Primary part is to bring within the scope first. My income is obviously taxable in India because I am teaching you sitting in India. I am receiving money in India. I am a resident also. Multiple reasons are there for the government to tax me. Okay. My residential status is also resident. My accrual is also in India. My receipt is also in India. Correct? So multiple reasons are there. So you need to find out the residential status to bring any income in the scope. So you need to find out the place of accrual and the place of receipt. Once that is done, once you are assured that income is taxable in India, it comes within the scope, then go ahead with the second part and do what? Computation. For computation, you will divide all the incomes into how many heads? 5 heads. It is written in section 14. Where? Section 14, classify the income into how many heads? 5 heads. Which head comes first? Salary. Income from salary. Which sections are there? From which section to which section? Salary. Salary? Which section? Not 16. 15. It is 15 to 17. Which is the second head of income? Income from house property. Which sections? You will just, I am asking you, na, kindergarten classes is going on. After 17, what comes? Huh? I knew that. It is 22 to 20. It is 22 to 27. Now you will ask me where has 18 gone, 19 gone, 20 gone, 21 gone, correct? These sections are omitted from the income tax law. What? It does not exist only today. Are you clear? If you open the law, after 17, you will directly get 22. In between, you will get a star mark, asterisk. You will find a note below. It is written that these are omitted from a particular year. Okay. So those were part of salary chapter only. Some allowances government used to give to salary people. Then later on, they withdrawn that. Okay. So today, there is no section like 18, 19, 20, 20. So in the new income tax law, they have done all these cosmetic changes. Okay. All those sections which are not there only, which are omitted. So they have removed only completely them. Okay. Maintaining the order of the law. Okay. Third, which head? Income from PGPP. Section 28 to 44, DB to be precise. Fourth is capital gains. 45 to 55A to be precise. Then income from other source. 56 to 59 it is. Okay, 4 sections are there in IFOS. After all 5 heads of income, what you will do? No, there are few more things that you have to do for calculations. Set off and carry forward also you have to do. Tell me now. If there are losses, you will set off, correct? If there is some clubbing of income, that also you have to do. Clubbing also is done in some cases. Minor income is clubbed, etc. Then you will get what? Gross total income. And then from there you will remove what? Chapter 6A deductions. And that will give you what? Your total income, and on this total income, what you are going to apply? Tax rates for computing the tax. We don't know as of now how to compute total income. We don't know the rates also. All of them are part of discussion of the batch. So again, I am asking, what is total income? Please repeat. It is income which is referred in. What does section 5 says? Scope of total. For finding out the scope, what we need to know? Residential status, place of accrual, place of receipt. Okay. One last thing for today, and that is coming to this discussion once again. Come to the first part of the definition of total income. Pay attention on this once again. What is written over here? Total income means an income. And so you should ask me, what do I mean by the term income? Okay. This is the last discussion that I'm doing as of now. The rest we will continue the next session. What do I mean by income? What is income? The name of the law is Income Tax Act. We should know at least what is income, correct? If we don't know anything else, that is fine, yaar. At least income definition we should know, yaar. After knowing the entire subject. You have done once in CA entirely, correct? What is income? Yes, please. Money what? Somebody was saying some money something. Yes, you were saying, I think so. No? Okay. Please say, what is income? Yes, please say, please. Anything that is earned, accrued, arised, that can be called as income? From economic or non-economic activities, both? Okay, fine. Anybody else? Please. Anything that increases the net worth of an individual according, what's your name? Jagupati. Anything that increases the net worth of a person can be called as an income. A good definition. Two definitions I have got so far. Both are correct according to me. Let me tell you, in the law, if you see the Income Tax Act entirely, the government does not give you the meaning of income. What do I mean by income? I don't know. As per law, I don't know. Okay. In law, it is not there. Okay. Meaning is not there. I'll ask you one simple example. Very simple and layman example I would like to ask you. Suppose there is a guy, there is a boy, and there is one girl who are about to arrange marriage. Okay. So the boy goes to the girl's house to meet her once. Okay. So the girl's father is asking the boy's father, what does he earn? Can he ask that question? Obviously. He has to ask that. Correct? So the girl's father is asking the boy's father, what does your son earns? Okay. So what will he say? Dowry is saying, right? Please say that. What generally a human will say? He is working in a company or he is having his business, correct? Right? He is working in some company, he's a chartered accountant, he's a lawyer, he's a doctor, or he's semi-qualified, whatever it is. Okay? And is earning this much salary, etc. That we may or may not disclose, that is your personal choice. But this father is saying to the father of daughter that my son purchases lottery. What does he do? He purchases lottery and he waits for his luck. Okay. If he wins, then he earns. If he doesn't win, then he doesn't earn. You being a father of a daughter, will you accept that as an income? Tell me now, please. You will not accept that as an income. Okay. Another example. Then that father of a boy said, he earns in the form of on birthday, on some events, Diwali, Holi, Dashera, Some people give him some gift. That is his earning. Okay. Will you, as a father of a daughter, will you accept that as an income? No, I will not accept. What do we understand from this? Income means something which should be recurring in nature, correct? Yes or no? Income means something which should come from a definite source, correct? Like salary is an income because it comes from a definite source of employment. Rental can be an income if you are wealthy, correct? That can be an income for you. You have to manage your properties, you have to earn rental out of it. Rental is an income because it comes from a definite source of property. Profits and gains is an income because it comes from a definite source of business and profession. It's not a small task to manage a business. Your interest and dividends can be income because you have huge investments in stock market or other places, correct? These are incomes. Income tax law does not have the meaning of income, but this is the meaning of income as per general understanding of people, as per dictionary. If you open the Oxford dictionary, you will find the same meaning in the Oxford dictionary. Something which is regular and recurring in nature, something which comes from a definite source. By this logic, getting a dowry is not an income. Okay. It comes once in a while. You don't marry every year. Okay. By this logic, getting a gift is not an income. Correct? By this logic, anything which is windfall gain. What kind of gain? Once in a while, which comes once in a while, is not an income. Even Supreme Court and many high courts have said that income means something which is recurring in nature, which is revenue in nature, which is not capital in nature, which comes from a definite source. Only that can be called as income. Pay attention on the board, please. So when in 1961, the government of India made the income tax law, they made the income tax law with an intention that income shall only include what kind of income? Which are really an income, which are real income, which comes from a definite source, not lottery, not gift, not dowry. Okay. These cannot be called as income as per the layman language. Okay. Income tax law also wants to stick to the layman language. In 1961, they said that we will only charge those incomes which are real revenue, comes from a definite source, like salary, like house property, like business and profession, like dividends, like interest. So can I say the scope of income is very narrow? Please tell me now. For the government to charge tax, the scope of income is very narrow. Very few things are charged as income. Yes. Now I'm making one small diagram for you, very small. Not a diagram also. It's a kind of x-axis and y-axis. Suppose this is x-axis. This covers what? Incomes. The x-axis is looking very small because the scope of income is very narrow. Okay. Very few things are considered income. Why the scope is narrow? Because only real income, only revenue income, capital receipts are not considered as income by the government of India in 1961. Only revenue receipts are considered income. Only income which comes from definite source are considered as income. So the scope is very narrow. And this axis I am making as a axis of rate of tax. What? So the government was charging around 30 to 40% tax rate. Okay. How much? Now, as the time passes away, the country was new. Okay. We did not have much resources in the initial years. We want more taxes, correct? So the government started what? Increasing the, no, not scope, the rates. They increased to 40%, then 50. What do you feel, to what extent they would have increased the tax rates in India, income tax rates? Yes, yes, correct. How much? 97.75% was the tax rate in India in 1973-74. Okay. How much? 97.75% was the tax rate in India in 1973-74 previous year. What encouragement will I have to come from Bombay to here? Tell me. What encouragement you guys will have to learn and become chartered accountant? Out of 1000 rupees, 977.75 rupees you have to pay to government, 23 rupees you will get. Okay. But this was the rate of tax in India. I know that you're going to go and check this, confirm this once first today. That really it was 98%. Yes, it was. You also said that. Will you pay? What will you do? What will you do? You will escape, try to escape. Correct? If you are not able to escape, what will you do? Do whatever you want to do. Correct? Put me in the jail. That's what you as a citizen of this country will do, na? Will you pay 98% tax? Obviously, no. You will not be left with anything to survive, na? People used to not pay anything. Total non-compliance across the country. Total non-compliance. Everyone came together and they said that we are not going to bear this particular thing. We are not going to pay you so much tax. Then government realized that if you want to increase the tax, we should increase the scope. Correct? We should define what is income. They have defined income in section 224 in an inclusive manner, meaning to even today we don't know what is the meaning of income. Okay. They started expanding the scope. They started putting such things in income which are not real in nature, which are not recurring in nature, which does not come from a definite source. Okay. If they start to make such amendments, will the common people of this country come to know how they are increasing the tax? Tell me. No. If they increase the rate, will everybody shout? Yes. Everybody will shout if they increase the rate. All those who are not paying, they will shout more. Correct? Anyways, how many people paid income tax in India? Tell me. 1.5 crore people hardly pays tax in India. Yaar. 6 to 7 crore people file return. 90% of the returns are nil returns. Correct? Yes. So hardly 1.5 crore people pays income tax in India. Okay. That too, in that also, most of them would be paying not more than 1 lakh rupees also. Yes. But if they increase the rate of tax from 30 to 40, 50, 60, 70, people will start to shout. They know that we should not play with the rates. Common people understand rates. Common people don't understand the nitty-gritties of the law. Okay, let's play with the law. So, from 1961, 4 to 5 items were income. Now there are 31 clauses in the definition of income. How many? 31. Gift is income. Lottery is income. Okay. Subsidy is also income. The subsidy which you receive now from government. In 2015, the government realized that in the entire year, the center and the state government gives a subsidy of around 10 lakh crore to different businesses. So that opened the eyes of finance minister. 10 lakh crore subsidy is received by whom? At that time, the finance minister was Arun Jaitley ji. Okay, who passed away. 10 lakh crore subsidy is received by different businesses across the country from center and state government. Let's impose tax. Let's make subsidy what? Income. 30% directly came to. Correct? This is how they increase what? The source. This is known as increasing the tax base of the economy. Okay. In 2014, the income tax collection was around 5.5 lakh crores. In 2025, it is 15 lakh crores. 3 times. The income tax collections have become 3 times in 10 years. Not by increasing your and my tax. They have increased the slab rates for us, huh? That we have to appreciate. What we have to appreciate, we have to appreciate. They have increased our slab rates to 24 lakhs. Above 24 lakhs, we are paying 30% now in new regime. They have made such small changes in the law, such technical changes in the law, because of which they are increasing the tax collections. One amongst them is including what? Subsidy is a part of income, which we are going to learn in the chapter of business and profession itself. How subsidy can be called as a income and how it is taxed. Gift, they have made tax in 2005. Prior to 2005, people used to do tax evasion with the help of gift. Let me share you one example. One last thing that I would like to say for the last 5 minutes. There was one very famous politician from North India. I would not like to name them, whose birthday was there. Okay. What was their birthday? So the politician told to the political workers, party workers, that you have to bring garland for me. What? Garlands. In birthday, you give na garland to people. Okay. To honor them. Correct? So you have to give garland. The party workers asked the politician, from where should we get the garland? How much the garland should be worth of? How big the garland should be? They will ask to the leader. So the leader said that you have to take that entire suitcase. 10-20 suitcases are there over there. In that there are 1000 rupee notes. What? 1000 rupee notes are there. And you have to make a garland of that. Okay. And you have to come to the stage and you have to honor me with that garland. Okay. So the party worker asked, if somebody asks that who has given you, income tax department will ask na, who has given you this garland? That garland was worth around 22 crore rupees. Huh? Okay. You can Google it if you want later on. Okay. I will not show you over here because this lecture is going to go on YouTube also. Please. So first few lectures will go on YouTube. I will get a notice from the political party. Okay. So that garland was worth 22 crore rupees. Now the question is, income tax department will ask, then what will we say? So the political leader said, don't worry. We will say we have received the gift from our what? Party workers and the people of this country. They love us. So they have given us. Okay. So then the government realized that we should make gift as what? Taxable. So then they realized that taking more than 50,000 rupees is considered as what? As taxable. Okay. So the things, every amendment has come with some background, some logic is there behind the amendment. So I'll be speaking about all those things. We will just recap what we have done in the last 2 hours. And so we will recap things, what we have done, start from the beginning, what we have started at the beginning of today's lecture. That to impose taxation, the government should have what? The power from the constitution, and the power to impose income tax comes from where? Louder. Entry number 82. And entry number 82 says what? Impose taxes on all incomes except, is there anyone who can impose tax on agriculture income? Yes, state government can impose tax if they wish to, but they don't impose as of now. Okay. Then comes after the power, what is entry number 97? Which taxes are imposed through entry number 97? Name some of them. STD, CTT, health and education cess. Health and education cess. Have you heard about a tax by the name called as equalization levy? Have you heard? Some of you might have heard. Okay. It will come in the syllabus, don't worry, later on. So that is also imposed through entry number 97. If you don't know, it's okay. We will talk about that later. That came in 2016. Then once the entry gives you the power, the next step would be to make a draft. That draft will go where? First it will go to Lok Sabha, then it will go to Rajya Sabha, and then it will go to President, and then it will go to official gazette. It will be becoming effective from a particular date. Income Tax Act officially has how many sections? 298. How many are there in syllabus, sir? All. Don't ask such questions. Okay. How many chapters are there in income tax? 23 chapters. And chapters are further subdivided into many chapters. We will talk like chapter 6A, correct? Then we started with our first section. Section 1 talks about how many aspects? 3 aspects. First, short title, commencement, extent and applicability. It is applicable to Whole of India. Forget about J&K, including J&K. That is implied now. We need not have to say it again. India means land first of all. First land, territorial waters up to 12 nautical miles. Then airspace above both of them. And exclusive economic zone for certain activities. Okay. Then we started with our charging section. Section 4, we have not completed that. Okay. We have just seen 1 or 2 points in that. What is total income we have seen just now. So what is tax? How to compute tax? Total income into rates. From where will I get the rates? Finance Act. Finance Act, which rates I will get? Person based rates. Individual, HUF, company, firm, etc. Slab rates. Income Tax Act. Income specific rates. Long term capital gain, short term capital gains, lottery, horse race. Correct? Then comes the definition of total income. Total income means what? It's an income which comes within the scope as per section 5. And for scope, you need to find out what? Residential status and place of accrual, place of receipt. If it comes in scope, only then go ahead and compute. And then 5 heads will come, you have to compute it. Okay. Obviously, computation of 5 heads we are going to see, except 2 heads of income we are not going to see. That is salary and house property removed from your CA final syllabus. Okay. In new course. So before May 2024, even salary and house property was there in CA final. Okay. So in CA final, you don't have salary and house property. These 2 topics are not there from CA Inter. Rest entire syllabus of CA Inter is there in CA final plus 200% more. Okay. Plus how much more? 200% more. Okay. Not much. Okay. Then the last thing is what is income? Is the term income defined in the law? Is there a meaning of the income? Do we know the meaning of the income as per law? As per law? No. Do we have the inclusive list as per law? I'll just show you the list. We are not going to understand anything today because we need to know the respective heads of income. Can you see this list over here? See, there are so many things which are there in the definition of income. Over the period of time, we are going to cover all of them one by one. Don't worry. Okay. Nothing will be left. All the points will be covered. Some of them will come under capital gain. Some will come under PGBP. Some will come under IFOS. Okay. Some of them are part of salary, house property also. Obviously, whatever income is there, you have to fit in either of the 5 heads. There is not 6th option is not available with us. We have to fit in the 5 heads. Okay. So we will. Let's read what we have done in the previous class first, and then we will go ahead with the next part. Come to the page number 1.1 of your volume number 1. Point number 2, I am reading from here. Charging section. The charging section of income tax law is given under section 4, which reads as under: total income of a person for a previous year is charged or assessed to tax in the next following AY. Next page, the event of computation is always done in AY by the assessee himself. This event is called as self-assessment. Okay. Income tax is first computed by assessee himself. And then if the department wants, they can what? Reassure, they can assess the income, they can do the assessment. Okay. Regarding assessments, we have to learn in detail in CA final. Income tax is total income into tax rates. For rates, there are 2 sources. We all have seen that. One is relevant, which covers person-based rates, and the Income Tax Act, which covers which rates? Income-based rates are covered in this range of section. What is the range of section? 110 to 115 BBJ. Okay. So, this covers the tax rates for lottery, tax rates for long-term capital gain, short-term capital gain. Everything is covered in this range. Okay. Now, the Income Tax Act is generally made with reference to AY. The relevant Finance Act for the previous year 25-26 will be Finance Act 2025. Now, just try to understand this line which is written over here, which was passed last year if an assessee stands in the AY and sees back. Is it so? See, for previous year 25-26, you will compute income when? 26-27. So the relevant Finance Act will be the last year, correct? So right now, if you are filing any return, okay, right now, so you would be filing for previous year 24-25, correct? So which budget you will follow? The last year budget, correct? So in the AY, stand in the AY and see the last year, which budget was there, okay? That budget will be relevant for your computation. Now the assessee has to stand in the AY and see which finance bill was passed last year. Therefore, most of the amendments are made with reference to AY. In Finance Act 2025, if an amendment states that it is applicable with effect from 1/4/2026, then it means it is applicable from AY 26-27, PY 25-26. Further, if some amendments say that it is applicable retrospectively from 1/4/2015, then it is applicable from AY 15-16 and PY 14-15. Then we came to the definition of total income. Total income has two parts. It means income referred in and computed in the manner laid down in this act. For that, we need to know what is section 5. For resident and ordinary resident, world income is taxable. Whereas for non-resident, only incomes that are accrued or deemed to accrue in India or which are received in India will be taxable. Okay, we have discussed all this in the previous class. I'm just trying to make you read once. Once this is established, the total income comes within the purview. Purview means the scope of section 5. Then it has to be computed in the manner laid down in this act. And then we have these 5 heads of income, clubbing provision, set off and carry forward, correct? And then chapter 6A. We have to learn all of them to compute proper total income of any person. Then we came to the last discussion, which we did in the morning. And that is, what do I mean by the term income? Now, officially, the meaning of income is not there with us. Yes, we only have the inclusive list. What all things will come in the definition of income? We have an inclusive list of that. We don't have the meaning of the definition of income. But in general terminology, income means something which is what? Real in nature, which is regular in nature. It is derived from a definite source. This theory is called as a real income theory, which was the base to draft the Income Tax Act 1961. I have put some examples over here. Salary is an income because it is derived from a definite source of employment. Rental is an income because it is derived from house property. Profits and gains is an income because it is derived from business and profession. Interest, dividend, capital gains is an income because it is derived from a source that is investment. Therefore, based on this general theory concept, we can say that income like lottery, crossword, puzzle, gift, or non-compete fees are not income in real sense. Okay. In day-to-day terminology, they are not income as they are not regular in nature. Therefore, to expand the base of income tax, the central government slowly and gradually they started doing what? Amending the definition of income under 224 to incorporate what? Capital receipts, artificial income, instead of increasing what? The rates of income tax. They are not interested in increasing the rates. In the last 10 years, the government has been relaxing the rates time and again for all kind of assessees. For individuals, they have relaxed the rates. For companies also, they have relaxed the rates. For companies, earlier the tax rate used to be 30%. Now it is 22% for some companies, and for some companies it is even 15%. You are going to learn over the period of time. So the rates are reducing till the taxes increase 3 times. How come? That is only because the government is increasing the base of the income tax to charge tax. Okay. They are not playing with the rates. Rates they are relaxing. They are trying to cover more people. They are trying to cover more income in the definition of income. That is the reason they have been able to do what? This particular thing. So this is where we stand as far as our discussion is considered so far. Now let's go ahead with the next part. The introduction is not completed. Still, it will take another half an hour to 45 minutes to start with our first topic. That is business and profession. Before that, there are a few more things that I have to say. The next thing that we need to understand that to tax any person, first of all, whether a person will pay tax in India or not, there are three things which we need to see first. Whatever a person is earning, is that a income or not? Okay. First of all, whatever you are earning, it has to be coming in the definition of income, correct? Whatever is the inclusive list given by the government, you should fall in that. If you don't fall in that, the question of computing tax does not arise only. The question of finding out whether it comes within the scope of or not, that is also of no use. First, find out whether what you are earning is income or not. Suppose whatever you are earning is an income, okay? Is salary an income? Yes, it is defined in the provision of the definition of section 224. It is defined in the definition of income also, okay? You can see over here, profits and gains is income, dividend is income, okay? Any sum received from employee, all these things are, there are various kind of definitions which are given over here. All these things are income. Once you come to know what you are earning is income, the next step would be to find out whether that income comes in the scope or not. For that, we need to find out the residential status. We need to find out the accrual or it is received in India. Once you know that, it comes in the scope also. Whatever you are earning is an income. Secondly, it comes in the scope also. Now, the third objective of our assessee would be to classify the income in proper head. Classification is very important. We need to classify the income in proper head now. Because if you do a wrong classification, that would lead to wrong computation, because every head has its own way of computing income. The way you compute income in salary and the way you compute income in PGBP is absolutely different from each other. And capital gains has its own way of computation, correct? So correct classification of income is absolutely important. Once correct classification is done, then we will think about computation, okay? So whether my income comes under PGBP or salary or house property or capital gains or other source, how would I come to know? How will I come to know? For that, you need to read the first section of every head. The first section of every head talks about the chargeability of that head. Whether I come under salary or not, that will be told by section 15. Whether my income is business and profession income or not, that will be told by section 28. Whether my income is income from house property or not, that will be told by section 22. Just for example, if a choice is given to all of us that you can show your income in whichever head you would like to, which head would you prefer? Which out prima facie, which head you find that you will get maximum benefits under income tax law? PGBP, correct? Because in PGBP you have lots of deductions, correct? You can claim so many expenses in PGBP, depreciation, general expenses, this expense, that expense, rent, electricity, etc. Correct? So if a choice is given to assessee, everybody will go to PGBP. A person working in a company will also go in PGBP, correct? Therefore, the choice is not in our hand. The choice is in the hand of the government. Government has given the charging section for all 5 heads of income. You have to read all 5 heads of income. First section, you will come to know whether you will come under that respective head or not. For example, when a person will come under salary, even though salary is not there in CA final, okay, but still some glimpse of salary we have to do. To some extent, it will be relevant in your exam. I will be explaining some of the provisions of the salary which you need to remember as a CA final student. So when your income will be classified under salary, please. There is only one condition you have to fulfill. There has to be an employer and employee relationship. If there is a contract between employer and employee in which it is written that the company is employer and you are employee, that's it. Then it doesn't matter that you go under which head. You have to show the income under salary only. And if you go under salary, you will hardly get any deductions. Correct? One standard deduction is there. Correct? And some professional tax, etc. Apart from that, there is no other deduction in salary. When your income will be covered under house property, what conditions you have to fulfill? For that, we need to check section 22. What is written in section 22? I'll say there are 3 conditions in section 22. If you want to classify your income as income from house property, you have to fulfill 3 conditions. First of all, you need to be owner of a building or land appertaining thereto. What? Owner of a building or land appertaining thereto. Second, that building has to be either a building or a land which is attached to the building. Okay. And third, that building should not be used for what? For business and profession purpose. If these 3 conditions are fulfilled, no matter what you are doing, you have to show the income under income from house property. And accordingly, you have to compute your income as per income from house property, section 23, 24, 25, 26, 27. So the first section of every head talks about chargeability. The subsequent sections of every head talks about computation. Okay. Which expenses are allowed, which expenses are not allowed. Everything is expressly written in the law. You don't have to make any assumption at your end. Whatever is written in the law, you have to do according to that. So today we are going to do some random guesses. I'll be putting some examples in front of you and random guesses without learning any of the 5 sections. I'll be putting some examples in front of you and I would like to check whether you are able to classify the income under proper heads or not. Shall we? You have done 5 heads of income computation, na? Correct? So before computation, what comes? Classification. Let me see whether you are able to classify the income or not. Okay. Shall I ask you? First question. I have some idle funds. I am Mr. A. I have some idle funds, so I have kept that idle funds in a fixed deposit in State Bank of India. From that, I am earning interest. Where will that interest go? Other source. Okay. Second example. Reliance Industries Limited has some idle funds. So they are putting that money in fixed deposit of SBI and they are earning some interest. Where it will go? It doesn't matter whether it is an individual or it is a company. It is income from other source only. Third example. Reliance Industries Limited is in talks with the government and they want one contract from the government. Okay. Say contract regarding construction of a metro. Okay. Or contract regarding construction of a bridge. Or contract regard any kind of government contract they need. Now the government is saying that as a measure of safety, you have to give us a bank guarantee of 100 crore rupees. How much? 100 crore bank guarantee you have to give us as a measure of safety if you do not complete the contract on time. So we will take that money from you. So Reliance said it's okay. I will make one fixed deposit. I will make one in SBI. And against this fixed deposit, I will give you what? 100 crore bank guarantee I will give you. Okay. Now from this fixed deposit, Reliance is earning what? Interest. Where will this interest go? Tell me. Other source? No. It will go under PGBP. Let me tell you why. Shall I say? If you read, what is the charging section of other source? Number. 56, correct? Now what is written in 56? Let me tell you. In 56 it is written, interest income, 56 I am talking about. Interest income will be charged under IFOS, income from other source, comma, if not charged under business and profession. What do you mean by this sentence? Does it mean that interest can also be charged under business and profession? Yes, that is the reason they have written such sentence, na? Correct? So you need to minutely check the nature of transaction. What is the intention of the Reliance industry to make an FD over here? To get a business contract. The intention is not to earn some extra money on idle funds. Okay. The intention is to get a contract of business. For that purpose, they are making a fixed deposit so that they can give a bank guarantee to the government of India. So such kind of interest will be classified under what? Please tell me. Business and profession. It is very closely related to the activity of business. And therefore, interest is considered to be an income. There are two types of incomes which can be covered in a particular head. One is called as, few incomes are specifically charged in a particular head of income, and few incomes are comparatively charged. Sometime here, sometime there. Let me ask you another example. I'm not writing this example. I'm just orally asking because it is connected to this discussion. If I generally ask you, where does profits and gains will go? What will you say? PGBP, correct? But that's not always true. For example, yes, it can go in capital gains also. If I sell jewelry and I earn profit, where it will go? Capital gains. Okay. And if jewelry shop sell jewelry, where it will go? PGBP. So how can you say that profits and gains are always covered under what? No, it depends upon it arises from what activity. Okay. Similarly, interest is also not specifically charged under IFOS. Teachers have put in our mind since CA enter that interest income means no, that is not correct. Okay, that misconception you have to remove from your mind from today onwards. In final CA, it will not always go under IFOS. It depends upon how you are earning that income. The same example which I told you, that will come in the exam. You will also see in the questions that for the sake of getting a contract, the company is, repeat the question also, the company is making a fixed deposit in a bank so that it can give a bank guarantee to the contractor, etc., the person who is giving us the contract, okay, to get his assurance. So whatever interest is earned, that will go directly in what? Income from PGB. Shall I ask you next question? Correct classification is absolutely important. Wrong classification would lead to wrong computation, that would lead to wrong tax liability. You will attract department's notice in that case. Next example. I am Mr. A. I have some idle funds. So I invested that in the shares of Reliance Industry. From that, I have earned some dividends. Where will it go? Income from other source. Without any second thought, we can say income from other source. Reliance Industry Limited has some idle funds. So they have also invested in shares of some company. Okay. They are also earning some dividend. Where will it go? Other source. Okay. Third, I am a mutual fund company. I am purchasing shares of multiple companies. Correct? Yes or no? That is my job, to purchase shares. Correct? From there, I am getting what? Dividends. Where it will go? Whatever answer you will say, I will say the opposite of that. Okay. And the answer is IFOS. Now you will say, just 5 minutes before, sir, we have given the same answer. You said that is wrong. So we said IFOS. Now you are saying it is, we said PGBP. So now you are saying, now I will tell you again why. Again, if you open section 56, which is what? The charging section of IFOS. For dividend income, what is written over there? I'll tell you. Dividend income, full stop. For interest, what was written? Interest income will be charged under IFOS, if not charged under PGBP, correct? But for dividend, what is written? Dividend income, full stop. What do you mean by this sentence, please? It is specifically charged under what? Please tell me. IFOS. Irrespective of whether I earn, you earn, Reliance earn, or a trader in shares earn. I don't know whether you understood or not. Understood? Dividend income will always be charged under IFOS only. Always under IFOS. Always, always, always. Irrespective of whether a small investor like us earns or whether the giant mutual fund company who is a trader in shares, they earn. For everybody, dividend will be considered to be what? Income from other source. Specifically charged. No if, no but, nothing. Always under IFOS. Dividend income, full stop. But for interest, it is not like that. For profits and gains, it is not like that. Profits and gains can come under PGBP also, can come under capital gains also. Next question. Point number 7. If you all want, I will share this particular entire file with you all at the end of the batch. Okay. So that it will help you all to recollect the things. Okay. At the end of the batch, in between, I cannot share. Next question, shall I ask? I am Mr. A. I have a house property which I have let out, from which I am earning obviously some rental income. Okay. Where will it go? Income from house property without any second thought. Okay. Next example. Classification is not a small issue. It's a very complicated issue. There are a lot of disputes in that. In practical life, we compute income, and after everything is done, the AO says, the assessing officer says that your classification itself is wrong. You should have classified not under this head, but under that head. Entire computation goes wrong. Entire tax liability reverses. Everything changes. That's the reason correct classification is absolutely important. So this is a very simple example. Let me give you another example, number 2 now. Pay attention. There is a builder over here. DLF. Have you heard about it? Yes. DLF builder is there. I would like to ask you one thing. I know that you will give me the correct answer. What is the job of this builder? What is the main object of this builder? Is to buy a land, construct a building, and then sell it. Correct? Now I am asking you a question. You have said these words. Please don't back out from these words after 2 minutes. Now he has built a building of 20 floors. Okay. 10 floors are sold. 10 floors unsold. Now he's expecting that it is not going to be sold in the near future. Okay. So for that purpose, what he is doing, temporarily he is letting out. Okay. Now wait. Don't make any conclusion, please. Now whatever rental income he is earning, where it will be classified, please tell me. Considering this class is nothing but it's a small economy. Okay. And you can see the difference in opinion here itself. Correct? Some people are saying what? House property. Some are saying PGBP. These two are the relevant heads where we are having a clash. Final answer, one answer. House property. Why? If it is unsold, then it is deemed to be owner. DLOP, what you are saying, deemed to be let out concept which you have done in CA Inter, that's what you are trying to say. So according to you, it is house property. Okay. Anybody else? Tell me, classification is not a very simple task. Huh? It's very complicated in real life. In exam, it is simple, don't worry. In exam, whatever examples we are discussing, they will stick to that only. Okay. What shall I write finally? Tell me. No, it is income from house property. Just recap 2 minutes back what you have said to me. What is the main job of this builder? To buy land, construct building and sell. Letting out is not his main object. Correct or not? Selling the building is his main object. Are you clear? Therefore, rental income from house property will be covered under house property only, irrespective of you let out or a builder let out. It doesn't matter. Okay. Let me ask you third example. There is a company over here. The main object of the company, which is written in the memorandum of association. It is written in the memorandum of association. The company writes its main objective. What is the object of the company? So the company is saying that the name of the company, I'll tell you the exact name of the company. The exact name of the company is Chennai Properties and Investment Limited. This is a real case study. This is the first case law we are doing in our CA final syllabus. You tell me what should be the correct head of income. Okay. It was written in the memorandum of association of the company that the main objective of the company is to acquire property in the state of Tamil Nadu and then let out. Then this was the main object of the company. It was written in the memorandum of association also. Okay. The substantial income of the assessee came from where? Let out. Now the assessee said that my main objective itself is what? To let out. Therefore, my income should be what? PGBP. Assessee went to Supreme Court. And the Supreme Court gave the judgment in the favor of assessee. Whereby, if these conditions are fulfilled, if what is written on the board, what is the first condition? Your main object is to acquire property or to construct property and then to let out. And your substantial income comes from where? Let out. Then you can show the income under what? Please tell me. PGBP also. Okay. Because this is a classic example for shopping malls. What is the main objective of a shopping mall owner? He will make a shopping mall. He will make so many shops inside that. Okay. And then he will do what? He will let out those shops. His main business is to let out. Now to such people, if you throw under income from house property, they will be under huge losses. I'll tell you how. Income from house property, what kind of deductions you get? 30% standard deduction, that's it. Correct? And municipal tax and max to max, if you have taken a loan on the property, you can claim interest, correct? But in business, you have many other expenses. If you are running a mall, you need to incur huge expenses for maintenance, correct? Security, electricity expenses, correct? Over a period of time, you have to renovate the things, correct? If something is broken. So the court said that no, that will be injustice with the assessee. If you throw the assessee under house property, you have to show under what? PGBP only. You have to show under PGBP. So for house property, I have given you 3 examples. First, if you and me let out the property, it will be going under house property. If a builder whose objective is to sell the property, if he let out the unsold property, then income will be house property only, correct? But if your main objective is to acquire property and let out is your main business, main activity is let out, then you can show under what? PGBP. This judgment came in 2015. We will read that judgment in a while. Now, one last thing, which is an amendment made by last Finance Act. I'll show you that amendment. That is a very dangerous amendment, which they have made in the last Finance Act. See this. I'll show you where it is there in the book. You right now read from the board. Last year they made this amendment. They have taken an oath that we will make the law complicated. Okay. What do you have understood from these 3 lines? That even if your main business is let out of Residential house property. It will be covered under what? Income from house property only. It means the Chennai property case law which I told you, that will only be applicable for which properties? Commercial properties. Let out of residential property can never go under what? PGBP. It will always go under what? So we will make one small chart, okay? Because there are a lot of issues in this, and then we will write down that chart. So do you have a notebook? Okay. Issues with respect to income from property. First, income earned by from let out of commercial or residential property by a normal person. Normal means he is not builder, he is not engaged into business and all. Like you and me, who is earning some other income, property is just an extra source of income. So for him, the income will be going under which head? House property, correct? Second, income from let out by builder from what? Unsold property. Where it will go? This will also go under house property because his main object is not to let out. Okay. Third, income from let out of commercial property plus main object is let out, correct? Substantial income is from let out. Where it will go? Please say. PGBP. Here we can apply the Supreme Court judgment of Chennai Property and Investment Limited. And the fourth point, income from let out of what? Residential property. Plus, even if the main object is what? Is let out. Plus, substantial income is also what? Let out. Till you will say this as what? Income from house property. There is only one case possible today now where let out income will go under PGBP, and that is that third case. That's it. Okay. People are making, especially in small towns. It is very easy to make a building in small town, correct? It is very difficult to make a building in metro cities. It is very expensive, correct? So people are making buildings in small town and making 4 or 5 flats in that. And then they are saying our objective is to what? Let out the residential property. So this is our business. Okay. It will not be listened now. It will be under house property only. Correct? If you want to get cover under business, you need to make a building and make shops inside that. Okay? Commercial property, if you let out, then it is called as business. So classification in itself is a very complicated issue. Once and slowly and gradually, whenever we will open the respective head of income, we will talk about the classification. Okay. This is, I'm doing a general discussion of classification. While writing only, you can answer few simple questions. Lottery income will go under which head? Always. Always. There is no doubt about some other head, correct? You cannot say na that it is my business of purchasing lottery every day. And then I will wait whether I can win or not. No. Lottery is specifically charged under IFOS only. Correct? Gift, other sources. Okay. Some gifts are covered under business and profession also. If you have received in business. Some gifts are covered in salary also. You would have seen in CA enter. If your employer gives you a gift, correct? You show under salary. But by default, generally gift is covered under other source only if it is more than 50,000 rupees. Correct? So there are two types of charging section. Few of them are specifically charging section in a respective head only. Some are comparative. You need to analyze. Which is specifically charged in a particular head, there is no doubt. But something which is possible here also and there also, there the doubt will come. Okay? Have you written this? Okay. Now, so these are few things that I had to say with respect to what? Classification of income as of now. So I have written all these things over here. If you come to page number 1.5 in your textbook, please. Classification of income, page number 1.5. After this, we will see the definition of person and then we will move ahead with our first topic. Classifying the income under correct head of income is utmost important because wrong classification would amount to wrong computation and would lead to further tax liabilities. Now, these incomes will generally be charged under their respective heads only. Following incomes will always be charged under their respective head as they have a specific charge under the Act. Lottery, winning, crossword, puzzle, etc., gift, dividend, whether accrued to investor or dealer, always. Rent from house property. Exception is what? Chennai Properties and Investment Limited, where the rental income is classified under which head? PGBP. Now, what does the court has to say? You can check it over here. In Chennai Properties and Investment Limited 2015, very important case law for exam, please. There are more than 150 case laws that we are going to do in class. Okay. But few of them which I will tell you, you have to remember. So please try to remember them. Okay. This is one amongst them. Writing the name of the case law is not mandatory in exam. If you remember, write. If you are not able to remember, don't write wrong name. That's what I would like to say. If you write a wrong name, then they will deduct the marks. If you don't write the name, then it's okay. There's no issue in that. The Supreme Court observe, because right now you are very energetic, correct? First lecture. Yes. Slowly and gradually, 5 case law, 10, 15, 20, 30, 40, then you will yourself stop learning, correct? You will say, forget about the case law. Let's remember the content at least, correct? Remembering the content should be your priority. Section number, second number. Case law, third number. Remembering section number should be your second priority if possible. Even if you don't remember, that is also okay. Let me tell you very clearly. But remembering the content properly is very, very, very important. Okay, that you need to write properly. Section number, you may write at some places. At some places, you can just write the provision without the section. That's okay. Nobody will stop you to get 60 to 65 marks easily. Yes, if your aim is to score 80 plus, 85 plus, 90 marks, 95 marks. If your aim is that, then you need to be very perfect in every aspect. Then you need to write the section numbers also precisely. Then you need to write down the case law name also precisely. Okay, then only then you will be able to score 80, 85, yeah, or all India highest if your aim is that. Okay. But if your aim is to score 60, 65, which is a reasonable marks, okay, then remembering content is most important. Rest of the things is your choice. Okay. The Supreme Court observed that holding of properties and earning income by letting out of these properties is the main objective of the company. Further, in the return of income filed by the company and accepted by the assessing officer, the entire income of the company comprised of income from letting out of such property. The Supreme Court accordingly held that such income was taxable as what? Business income. So that was the year which was shocking for all of us. 2015. For the very first time, we also saw that a rental income can also come under what? PGBP. Before that, even we were not aware. Okay. But this brave assessee has fought against the department, and the department lost the case and the assessee won the case. Likewise, in Rayala Corporation Limited, another case came in 2016. The Supreme Court noted that the assessee was engaged only in the business of renting of properties and earning rental income therefrom, and accordingly held that such income was also taxable as what? See, another assessee came forward and said that I am also doing same activity. So my income should also be covered under what? So that assessee also won. Third assessee came. Okay. However, in the case of Raj Dadarkar Associates versus ACIT, Assistant Commissioner of Income Tax, on account of lack of sufficient material to prove that the substantial income of the assessee was from, what do you feel? Where it will go? House property. Assessee was not able to prove that the sufficient income comes from where? Letting out. Therefore, this was classified as what? Income from house property. Okay. So there are multiple case laws which has come on this. These are just some of the Supreme Court judgments which ICAI has highlighted in your study material. Okay. There might be 100 more case laws based on this issue. There are more than 85,000 case laws which has come in income tax so far. Okay. Out of that, Institute has picked 150 case laws. Okay. For your syllabus. And still we say that income tax is very huge. Where it is huge? Only 150 case laws out of 85,000. More than 85,000 case laws are there. Okay. So it's a very complex law. Not that simple. In practical life, if you go into the practice in litigations and all, where you have to deal with the department people, it is a very, very complicated thing. We will learn over the period of time. Now, comparative charge, what comes under comparative charge? Interest? Yes. Profits and gains? Say na. So, interest will be charged under IFOS if not classified under PGBP. If jewelry is held as and it is sold, it will be chargeable under capital gains. But what if the jewelry is sold by a jeweler? Then it will be considered as income from PGBP. Okay. So correct classification is absolutely important. Few important classifications I have told you today. The rest of them we will learn today in the chapter of PGBP also. And whenever we will open the respective head of income, we will talk about that. Because for that we need to actually learn the first section of every head. Okay. Now one last thing before I start with our first chapter. If you see that in the charging section, section 4, what was written at the beginning? If you can remember. Total income of a person. Okay. So we need to know what do I mean by the term person. The term person is defined under section 231. Okay. And all these people are considered to be person which are given in this circle. All these people are considered to be person. In the entire income tax law, the word person will come hundreds of times. Every time the word person will come, you have to refer this definition only. So who all are in the definition of person? The very first person is individuals are liable to Income Tax Act. Second, HUF will be liable for income tax. Third, companies. Fourth, firm will include LLPs also, limited liability partnerships are also part of firm only. Then AOP, BOI. Then local authority. Okay. Local authorities are there na in every state, municipal authorities. Okay. Now, these are very 6 specific persons. Then came the last one, 7th one. It's a general point. Artificial juridical person. Who will come in this? Balance. Whatever comes to your mind will come under 7th point. Can you name some of them? Temples? Yes, you can say temples will come over there, religious places. Okay. Anything else? Cooperative society, excellent. Cooperative society are not specifically mentioned in the first 6 points. Okay, they will come under the 7th point. Trust will come, charitable trust, etc. Okay. All these people will come under 7th point. Okay. Political parties will also come under what? They will also come under the 7th point. So for 7th point, there is no end. Any kind of organization which is not falling under the first 6 points will come under what? Will come under the 7th point. Okay. So this is where we stand as far as our charging section is considered. I will just open the charging section which I have wrote in the morning for you all. In this charging section, we don't know two things as of now. One is previous year, one is assessment year. Apart from that, rest of the things I have told you. What is person? What is total income? What do I mean by what? Charge to tax. Okay. So this was the basic introduction that I had to give you, which I have given you. So now we are going to start with our first topic, and that is what? PGBP. Okay. Pay attention, please, all of you. Chapter 1. So let's start with our first topic now. Profits and gains from business and profession. You would have done in your CA Inter this topic. I am not going to make any assumption, okay, that you have done it. We are going to do it very fresh, as if you have not done in CA Inter. Everything I am going to teach from that perspective only. If it takes some extra time, that's okay. Because this is a very important topic for exam. The first question in your exam is going to come from this topic only. You will be given a P&L account and you will be told to compute the total income of the assessee and the tax liability of the assessee for 14 marks, which is compulsory question. You don't have any option in that. So this chapter is a must-do topic for every student. Okay, rest of the syllabus, you can leave 1 or 2 topics as an option, but this topic you cannot. So let us start with this particular topic. The provisions of PGBP are given from section 28 to section 44. DB, pay attention please. The very first section of PGBP, that is 28. This talks about the chargeability of PGBP. That when you will come under PGBP, everybody would love to come under PGBP because in PGBP you will get maximum deductions and exemptions. So as an assessee, if given a choice, I will always try to come under PGBP, but my choice doesn't matter over here. What is written in section 28, that what matters. If whatever is written in section 28, if you fulfill that, then you can say safely that you are covered under what? PGBP, and you can compute the income as per PGBP in the entire chapter. Computation will start from the next section itself, section 29. So for every head, the first section will be charging section. There are 3 heads of income which are there in your syllabus: PGBP, capital gains, and IFOS. The first section of PGBP is section 28. The first section of capital gains is 45. The first section of IFOS is 56. Whenever you will do all the 3 heads, whenever you will start these chapters, the very first thing you are going to do is you are going to do an analysis of the charging section first. When you will come under that head. So sir, when I will come under PGBP, sir? So for that, we need to read the charging section 28. And in this also, there are 2 types of charging section. There are 2 types of charging section in PGBP. There are 2 types of charging section in capital gains also. There are 2 types of charging section in income from other source also. One is called as, see on the board please, general charge. What? General charge is covered under section 28 clause 1. And second is called as special charge. Special charge is covered under multiple section 28.2, 28.3, 28.4, 28.4a, 28.5, etc., etc., etc. Today we are not interested in this. We will talk about special chart sometime later. Today I am interested in general chart. 99% of the SSE will be covered over here. 1% SSE who is not getting covered over here, for them the government has made a special charging section. 99% of the businesses will covered under general charge. Sir, what does general charging section says? I am writing on the board the charging section for you all. And then we will do the analysis of that, so that we should happily come under the PGBP chapter. Everybody would love to come under that chapter. So you have to fulfill these two lines what I am writing on the board. See on the board, please. Profits and gains from business or profession carried on by the SSE at any time during the previous year. If you fulfill these three lines, then you are covered under PGBP. That's it. But it's not that easy to fulfill these three lines. There are a lot of issues, there are a lot of definitions. We need to understand each and every term over here very precisely. Sir, what do you mean by the term business, sir? What do you mean by the term profession? What do you mean by the term profits and gains? What do you mean by the term carried on by SSE? What do you mean by the term at any time during the previous year? We need to know the meaning of each of these sentences and words. First, what do you mean by business? Second, what do you mean by profession? Third, what do you mean by profits and gains? Fourth, carried on by SSE means what? And fifth, at any time during the previous year means what? If you fulfill all these conditions, you can safely say that you come under PGBP. And once you come under PGBP, you compute as per the provisions of PGBP, claim lot of deductions which are given in this chapter, which are not allowed to salary people, which are not allowed to IFOS people, which are not allowed to other heads. So what do I mean by the term business? What do you feel? Is the term business defined under income tax law? Is it defined? Yes, it is defined. Just try to remember these three lines, please. In the order, please. Profits and gains from business and profession carried on by the SSE at any time during the previous year. Very simple sentence. No complicated words are there. Business is defined according to you. Okay. Yes, it is defined. It is defined under section 2, bracket 13. Just for your information and knowledge, I would like to say, I hope you might be knowing this point, which I am going to say now, that all the definitions are given in section 2 in which order? Alphabetical order. I hope everybody knows that. Okay. All the definitions are given under any law in alphabetical order. So in income tax also the definitions are given in alphabetical order only. It starts from section 2.1. The first definition under income tax law is of advance tax. And the last definition under income tax law is of zero coupon bond. Okay. A to Z. Okay. So for finding out, if you want to find out any term, it is easy alphabetically to search anything. Okay. There are in all 89 definitions under income tax law in section 2. 89. All 89 are not supposed to be learned by you, but yes, with respective chapters, you have to learn lot of definition. Like right now we are learning business, then we will learn profession. In capital gains, you will learn capital asset, transfer, etc. With respective topic, you have to learn the definitions. So the definition of business, unfortunately, it is there. It is there in the law. But again, it is there in a inclusive manner. Again, they are not ready to give the meaning. Wherever they feel now that the things are complicated, okay, they keep the doors open. They make a what kind of definition? Inclusive. Okay. And what is the beauty of an inclusive definition? Definitions can be of two types. One is exhaustive. Exhaustive definition will start from means. This means this. It means that's it, full stop. But inclusive definition doesn't have a full stop. Okay. It can go on and on and on and on. Therefore, according to you, what will come in business? Any guesses you want to make? Trade? Excellent. Manufacturing? Perfect. Anything else? You have said me most of the parts of the definition. It's such a small definition. See, I am telling you as per the law. Business includes, first of all, it's an inclusive definition, not an exhaustive definition. Business includes trade, comma, commerce, comma, manufacture. And at the end, they are writing in the nature of adventure. There has to be some kind of adventure. Adventure means what you are doing, there has to be some kind of risk. Without a risk, it cannot be called as what? A business. There cannot be a single business in the universe which you can name me and there is no risk in that. It is not possible. So there are 3 points which they have mentioned. Trade, commerce, manufacture, and they have attached one condition that there has to be a risk with that, adventure with that. Let's talk about individually all 3 of them. Okay. What do I mean by trade? Buying and selling some goods, correct? That is trade. But when you read trade, don't read trade independently. You have to attach one condition that trade should be in the nature of adventure. If there is no adventure, there is no trade, then it is not called as a business. For example, we all used to buy, or we may today also buy newspapers at home, correct? The newspapers come at home and after a few months, lots of newspapers are accumulated. So what we do? We try to sell it off, correct? Are we doing trade? Yes, we are. You only told trade means buying and selling. Just 2 minutes back, you told me, trade means what? Buying and selling, correct? So, are you buying a newspaper? Then are you selling that newspaper after some time? Yes, it comes in the definition of trade. But there is no adventure in that, correct? Are you worried about it? I am buying a newspaper. What if it is not get sold? Yaar? You are not buying the newspaper for selling, correct? You have bought it for reading. If it is sold, well and good, or else we'll give it to your mom. She will use in the kitchen, correct? For some other purpose. Yes or no? So there is no adventure in that. So that cannot be called as a business. There has to be an adventure. Similarly, what is commerce? Commerce means when you do trade at a very large scale, national level, international level, when the scale of the business increases, that is called as commerce. Manufacture, obviously, you know what is manufacture. When you make something out of something by using material, by using manpower, machine, etc. Correct? All of them should have what? Adventure. Otherwise, it is not called as what? It is not called as business. So what is business? What is not business? The real fight starts from here itself. We have computed the entire income of the assessee, and then the assessing officer is saying what you are doing is not a business only. He is transferring me to IFOS. He is transferring me to which head? Directly to IFOS. I have to fight with him. I have to prove that I am doing what? Business. I have to prove that I am taking risk. I have to prove that I am doing some kind of trading, manufacturing, where I am doing some kind of risk. So the definition of income tax is very, very, very incomplete, I can say. Business includes trade, commerce, manufacture. It doesn't give me any substantial test. It does not give me conclusive evidence to test any kind of situation in this world. There are many case laws. One of the case laws I would like to say you all. One better definition given by Supreme Court. Better than what income tax law will tell. The Supreme Court in the case of Barendra Prasad Ray has held that business implies a systematic and organized activity. What? Systematic and organized activity. By applying labor and skill. What? By applying labor, skill, with a dominant intention of earning what? Profits. Much better definition than what the government of India has given. Correct? There are plethora, there are hundreds of different kind of definitions given by different courts. As far as what is business, what is not business. You have to check based on facts and circumstance of every case. I cannot give you a test tone to identify that, yes, this is the formula, and with this formula you can identify every case whether it is business or no. You cannot do that. You have to look into the situation of each and every case and identify what is business, what is not. Similarly, what is profession? Is the word profession defined, sir? Yes, that is also defined. Where it is defined? It is defined under section 236. This is also defined in a inclusive manner, and in fact, it is a one word definition. One word. Profession includes vocation. What? Vocation. The single word definition given in the law. It would have been better they would have not given this definition. Correct? We would have understood something out of it here with this word. It's a general term. So you will ask me, what do I mean by the term? What is vocation? Vocation means any occupation where you require some kind of skill, training, correct? That is a vocation. You need some skill to tell that you are a professional. Skill is important. Degree is not important. Certificate is not important. You may have certificate, you may not have certificate, that's okay. But skill is primary. For example, a doctor has a skill as well as a certificate, correct? A lawyer, chartered accountant has a skill as well as a certificate. But a film star has skill, but he doesn't have certificate. A cricketer or a sportsman has skills, but he doesn't have, but they are also professional, correct? What is important is you need to have possess some kind of skills. That skill might be from a skilled profession or from unskilled profession also. That's also okay. There's nothing wrong in that, okay? You might have studied, you might have not studied to earn that skill. That might be natural skill in you. You might have taken that skill. It doesn't matter. Degree will not play a very important role to call your profession as a profession, okay? Now, few examples I have put over here to ask you. If you come to our color book now, and if you come to the color book, page number 1, these are the things which I have told you just now. Just now, I have told you these things. We will read that much. Whatever we are doing, we need to know exactly where it lies in the book so that on the day after completing the lecture, you should go home and revise that much. So, profits and gains from business and profession. Section 28(1). Charging section. What does it say? Profits and gains from which was carried on by assessee at any time during the previous year is charged under PGBB. This is general chargeability under the head business and profession. Further, there are certain special charging section as well. We are not going to do that as of now, which do not fulfill the conditions of general chargeability to widen the scope of what? Taxability. So to widen the scopes, a few things are not covered in general chargeability. So the government made 28(2), 28(3), 28(4), etc., which is given later on. We will talk about that later. You can see over here. Okay. Special charging sections. Now, whether a particular income will come under the head business and profession will be dependent upon facts and circumstance of each case. The term business is defined under 213 in an inclusive manner to include what? Trade, commerce, manufacture, or any adventure in the nature of trade, commerce, or manufacture. This definition does not give any what? Substantial test to identify whether an activity amounts to business or not. We need to rely on the judgments given by the court to understand the term what? Business. What do you mean by the term profession? Profession is a single word definition. Profession includes what? Vocation, and vocation means what? Occupation requiring some skills. It doesn't matter whether you are doing business or profession. The computation for business as well as the computation for profession under the entire chapter is same only. Okay. If a businessman is getting one deduction, profession will also get the same deductions. All the deductions are almost same only for both of them. At the end, the things will change. You might be knowing what conducting audit. Tax audit limits are different now for both of them. What is the limit of tax audit for a business? It should exceed 1 crore rupees. Correct? And for profession, 50 lakhs. There the things will change slightly. Okay. Till then, the things are going to be same only. We will take few examples now to understand whether the example which I am going to say now is going to come under business and profession or not. Okay. The first example, let me read it. Interest income on deposits made in bank. So you have made some deposits in the bank. From there you are earning some interest. Now why you have made this deposit? to give a bank guarantee on behalf of the assessee for a tender. You want some government tender? Okay. So the government tender you want for metro construction. For that, the government is saying you have to give a bank guarantee of 100 crore. So you are making a fixed deposit in the bank and giving the bank guarantee to the government, and you are earning some interest. Where will this interest be classified? Income from PGBP. It is not classified under IFOS. All interest are not classified under IFOS. Let me tell you very clearly. Only those interest income will be classified under IFOS which are invested with an intention of what? Just earning some idle money. Okay. If your intention is to earn some idle funds, you have idle funds kept at your home, you are putting in the bank, you are earning interest, that is IFOS. If your intention is to get a business contract, for that purpose, if you are making a deposit, very important example, it comes in exam lot of time, you can mark down this as an important point, okay, please. It comes in the exam lot of time. Then it will be classified under what? PGP. Right hand side, we will see the explanation. Even Delhi High Court has given a judgment on this. Judgment name you may or may not remember. The entire booklet, I'll tell you, is divided into 4 colors. Okay. All the important points are already in red. All the amendments made by Finance Act 2025 are already in green, so that you can identify this is what? This is the latest amendment. You have to pay special attention to that. Amendments are very important in exams. You can safely say 15 to 20 marks in your paper will come from amendments only. All the case laws are in blue color, so that you come to know that this is a court judgment, High Court or Supreme Court as the case may be. And all the section numbers are what? In purple. And your main content is in dark blue color or black color, whatever you can see in your book. Okay. So, right hand side, we will see the explanation. The interest so earned is not an independent investment activity. I have not put money in FD with an intention of investment. Okay. If I would have put the money in the FD with an intention of what? Investment, then it would have been IFOS, correct? The such deposits are so placed are, it's a technical word now. What is written? Inextricably means you can write down closely. You will find out such words in your study material. Okay, so I have used that technical word only. I am not replacing that with a simple word. Okay. It is better you also write in the exam what? Inextricably. Few technicalities should be there in your paper. Okay. So they should feel that you are writing a paper like a professional. Okay. It's all a matter of perception in the eyes of the exam. He has 15-20 minutes to judge you. Whatever you are working, whatever you are doing with me, and after the batch also completes and what you write in 3 hours, the examiner will have a maximum half an hour to judge your efforts. So perception matters a lot at that point of time. If possible, use some technical words wherever you can. Such deposits so placed are closely linked with the activity of business. Therefore, it is chargeable under what? Business and profession. Now, second example. Pay attention on the board, please. Let me give you the background of the second example. Then you think, take your time. Okay, we are not in a hurry. Take your time and tell me where this income should go. I'll tell you the background and then we will read. Wait. I have a factory where we do some manufacturing activity. Okay. Now that factory is locked out because of some reason. Temporary. Maybe the employees are on strike. Okay. Because of some reason, it is locked out for few months, 3-4 months. Okay. Now, as a company owner, I know that the employees will agree after 3-4 months and they will come back to the work. I will listen to their terms and conditions after 3-4 months. Till that time, we will negotiate. Okay. The employees are asking for hike in salary, etc. I am not ready to give them immediate hike. So the employees are gone on strike. Company is closed, but temporarily. So as a business man, what I am thinking, the factory will be closed for 3-4 months unnecessarily. The plant and machinery is kept inside. That will be rusted unnecessarily. Okay. So I gave the plant and machinery, furniture on rent to someone for few months. Okay. I told that for 2-3 months you take this. on rent and give me what? The rental income. So where shall it go? The rental income. First of all, you can read the left hand side, the issue. The SSC has let out the plant and machinery during the course of lockout in the factory, whether the rental income chargeable under IFOS or PGPP. What do you feel? Where it shall go? Again, it's a debatable issue, correct? Some people will say PGPP. Classification is not a very simple task. It's a very complicated task. Again, the matter went to the court and the court said that PGPP. The reason is, the court said that what is the use of the assets of the business? What is the use of this camera? Why we have put this camera over here? To record the lectures. Why to record the lectures? To sell the lectures, correct? Ultimately to earn money. Yes. What is the use of this podium, this iPad, this computer, this benches, this AC, this entire building, correct? To earn money. The court said that the use of the assets, the businessman employs assets in the business to earn money out of it. Now, if the businessman is not earning money by teaching to the students because there is some strike, or the businessman is not earning the money by manufacturing because there is some strike by the employees, it is his business intelligence. Okay. It is his business intelligence to earn this money by letting out for few months to cover up the cost of what? Cost of rusting the what? Cost of machinery. At least we have to maintain the machineries, etc. in the factory, correct? We need money for that. We will use that money. Therefore, this income should be classified under what? PGBP. Read it, please. It is his business intelligence, which is technically called as business expediency. Check it, please. I have highlighted already all the important words, please. Still, if you want to highlight, you can highlight at your end. Okay. This book of 184 pages, this should be your main source on the day of exam. Okay. You have to study start to end this book, and 100% syllabus is covered in this. Nothing is left out of this. Entire study material of 2,500 pages is covered in this. You can go and compare. Okay. But obviously in a slightly concise manner so that you can revise a day before exam. With all the case laws, all the section numbers, everything is covered in this book. One more case. Just read this paragraph, please. Where the facilities cannot be used by the owner himself on account of some problem in the company and it is temporarily let out to generate some, it would amount to his business expediency. Therefore, such income shall be coming under the head. What? Just write down. You may not write. It is already given. The relevant head is over here. Okay. I have made a separate column for the relevant head. Another example. See, if I just give you this much data now, it is not correct from my side. But still, I would like to give only this much data and check what answer you give me. I am letting out go down. Where it will go? Go down, I am letting out. Go down, I have a go down. You want my go down on rent. So I gave you. Don't read. I gave you that go down on rent. Where it will go? I have a go down which I am giving on rent to you. You are giving me rent. Where it will go? House property. Correct or not? It is from let out of property. Correct. But this assessee, completely read now. He was not only letting out go down, but he was also giving what? Some warehousing services. You can come on the right hand side. What services he was giving? Check. He was also giving pest control services to the assessee. He was giving rodent control service, fumigation service. He was also providing security and protection. Check the last line. Are you able to see? So the court said that it is beyond letting out. Therefore, this income should be chargeable under what? Please tell me. PGBP. So without knowing the facts and circumstance, we will not be in a position to answer that which income will come under which head of income. Okay. It is not possible. Sir, what we will do as a student, you don't have to worry. They will ask you the same examples. Okay. They will not ask you some altogether new case. Okay. If they are asking some altogether new case, they have to put all the facts and circumstances in the paper. Okay. So that you as a student should do what? Analysis of the case. Learning direct tax in detail is very important, not only for direct tax, but also for IBS. You all know that IBS is a paper where all 5 papers are going to be mixed up and coming. And direct tax plays a very important. direct and indirect tax will come for approximately 50 marks. As far as the last 2-3 attempts we have seen, DT itself comes for 50 marks. And remaining 3 papers and your self-paced papers taking together, rest of them all together come for 50 marks. So DT plays a very important role in your IBS also. So learning these 2 papers technically, logically, doing each and every analysis of the provision is very important for IBS also. Anyways, the 4th case law, where let out of immobile property, whether let out of immobile property will be chargeable under income from house property or PGBP. Now, there is one case law of what? Chennai Properties and Investment Limited, which says that if your main object is to let out and your substantial income comes from let out, then it will be what? PGBP. Then it will be PGBP. But then again an amendment came in Finance Act 2024 which says that if you let out which property? Residential property. Then it will not be coming under PGBP. It will be coming under house property. It will be coming under house property. You can check it over here. Okay. So therefore we can conclude that this case law is only applicable for which properties? Commercial property, which I have written here also. Okay. You can check. Is it clear? Coming to the charging section of PGBP once again. What is business? What is profession? It's a matter of great litigation. What comes under business? What comes under profession? It's a very litigative matter. Practically, you have to look into the facts and circumstances of every case and identify. Let's come to the 3rd point. What is profits and gains? Sir, what is profits and gains? Pay attention on the board. Profits and gains under income tax law in section 28 should have 4 characteristics. It should fulfill these 4 characteristics. First, the profits and gains, if you want to charge under section 28(1), general charge, it has to be revenue in nature. Which profit? Revenue profit. It should not be a capital profit. For capital profit, we have made a separate head of income. That is what? Capital gains. Okay. Only revenue profits will come over here, not capital profit. If I make a shirt and then sell the shirt, it is a revenue profit. Okay. But if I sell my house, then that is not revenue profit. That will come under capital gains. Second, the profits may arise in cash or it may arise in kind. The consideration from the customer may be received in money. It may also be received in what? Non-monetary consideration or kind, whatever you want to say, it doesn't matter. The 3rd point, when I will write, there might be some controversy. Some of you might raise some question on the 3rd point. The profit may arise from legal business or it may also arise from illegal business. Income tax says that it doesn't matter to us whether it comes from legal business or illegal business, we will take tax. Do you want to say something on this point? Please. What do I mean by this sentence? The income tax laws clearly says that we do not differentiate between legal and illegal business. If you earn money from legal business, we will take tax. If you earn money from illegal business, then also we will take tax. Do you have some queries with respect to this point? Please say. Your body language tells me that there are some queries. Please say, or else I will raise the query. Don't have any queries with respect to this? Please, second last bench. Say. Are you need to be confident in life. Okay, you are going to be a chartered accountant. You need to speak in front of hundreds of people. Please. Illegal business, how? Okay. Sir, how come illegal businesses are subject to tax? Correct? For example, if you go to Bihar or if you go to Gujarat, liquor is banned in those 2 states. Okay. It is not allowed. It's illegal to sell liquor. Now, if some person is caught selling liquor over there, okay, and he admits that, yes, I have sold liquor of 50 crore rupees. Yes, he has been caught by the police. So will CBDT not go and take their share of income tax from that person? Please tell me. Or they will say, no, 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 liquor is banned now. Why we should take income tax? Please tell me. See, taking tax from illegal business means when a person will be caught. At that point, we will go and take what? Tax. No illegal business will file the return and self-disclose the income, correct? Will a person who is doing illegal activity, will he do self-assessment and pay tax? Charging illegal business means if you are caught doing an illegal business, then you will also not be spared from it. You also have to pay taxes. Okay. The way a legal person pays tax, you also have to pay the tax. That's what they want to say. A thief is not a thief unless and until he is caught. Obviously, no? Till the time you are not caught, you are not a thief. The day when you are caught doing an illegal activity, and if you admit that you have earned this much income out of this activity, then obviously the CBDT will come to know about that information and they will ask for their respective share of tax. Okay. Fourth and the last point is the profit has to be first revenue in nature. It has to be cash, kind, both are covered. Legal, illegal, both businesses are covered. Fourth and the last point, the profit has to be a real profit. Now, what do I mean by this? Pay attention, please, all of you. The profit should be real. The profit which is charged under section 28 clause 1 has to be a real profit. Real profit means the selling price has to be real. The profit should not be notional. The profit should not be anticipated. The profit should be actual profit. If you want to take tax from assessee, you need to compute actual profit. But we all know that in India, at least 90% of the business and profession assessees go for a special section by the name called as 44AD, correct? There the profit is real or notional? Notional, 6%, 8%, correct? Is this a direct clash with this particular sentence? Please tell me. I am saying you the profit has to be real. 44AD says the profit is just 8%. Obviously that is notional, correct? Now how come? Because that section 44AD is a special section which comes with a special line by the name called as notwithstanding anything contained in section 28 to 43. It overrides the entire business and profession section. Are you clear? And that is the reason that section says that forget what is given in business and profession. According to 4480, the profit is just how much? 8%. Show that much and you relax. Okay. But by default, apart from 4480 assessees, who are 4480 small people are covered, correct? Whose turnover is up to 2 crore, 3 crore. Yes. What about others? They have to compute real profit, right? About them I am talking here. Okay. Yes, there are exceptions where you compute profit as per what? Notional basis. 44AD is there for professionals, 44ADA is there. Then for some truck wala, etc. person, goods carriage, A is there, correct? All those are notional, but all the sections starts with golden words. What is that golden words? Notwithstanding anything contained in 28 to 43. So if you want to override something, you can put such sentence and you can override the other provisions. So by default, the profit has to be what? Real profit. Now coming to the charging section once again. Last 1 or 2 points I am saying, and then I am going ahead to the computation part. Profits and gains from business and profession carried on by the assessee at any time during the previous year. Now what do I mean by carried on by assessee? Carried on by assessee means assessee should control the business. It is not that every activity has to be done by the assessee himself. The control and management of the business should be in the hands of the assessee. He should have the right to make the things done from through others. Okay. At any time during the previous year means, it means the business can be done even for some time during the previous year. Not necessary that it should conduct for 365 days. Some businesses are conducted 365 days. Some businesses are done for few days Seasonal they are, okay. That depends upon business to business. It is not necessary that the business should be conducted for all 365 days. Now, these are the few things which are given in your book also. Whatever I have told you, you can find out all those things over here in point number 4, point number 5 and point number 6. Okay. You can see the list of sections also over here where real profit is not relevant. Can you see? Yes. All these sections are overriding sections. They start with which words? Notwithstanding. They override the provisions of business and profession. Okay. Now from here onwards, we are going to start our academic discussion. Till here, whatever I have told you, that was important to understand the chapter, understand the subject. From here, not only important practically, but also academically. Once we know that we come under PGBP, what will be our next step? Are you doing business or profession? Are you earning profits and gains out of it? Now you have to compute, correct? See on the board, for that we have section 29. This section tells us how to compute PGBP. Pay attention, please, all of you on the board. Please, please, please. Wait. Such an important question I am asking to the income tax department. And see the answer they are giving me. Shall I say? They are saying according to section 30 to 43D. I asked them how to compute PG. This is what it is written in the Income Tax Act. I am not saying that it is written in our books. It is written in the Act. You have to follow section 30 to 43D. They are saying learn 14 sections. You will come to know. Okay. First learn 14 sections. Then you will come to know automatically how to compute PGBP. Very lame answers. It is not given under other heads. They are not like that. Under other heads, they have given proper computation. If you go and check house property, you would have done in CA enter house property. They have given complete method how to compute house property. First, you have to take gross annual value, then municipal taxes, then you will get net annual value, then you will get a standard deduction. Complete proper format is given. Proper. If you see in capital gains also, proper format. You have to take full value of consideration. You have to reduce expense on transfer. You will get net consideration. You will reduce cost of acquisition, cost of improvement. Then you will get long-term, short-term capital gains, whatever it is. Proper computation is given in house property. Proper computation is given in capital gains. Even in salary, they have given proper computation. You have to take basic salary. You have to take DA, etc., bonus, commission, this, that, allowances, perquisites, gross salary, then some deductions. Beautifully they have mentioned. But in PGBP, no. They have just given range of sections that you have to learn. Study section 30 to 43D. Just assume that we know all 14 sections. Okay, let's assume. What is given in these 14 sections? There are two things which are given in these 14 sections. Only two. One is deductions. One is disallowances. Correct? Deductions means which are allowed to you. Disallowance means which are not allowed to you. These are the two things which are given, correct? Mainly, assume we know all of them. Little bit to we know na from CA enter. Little bit, you cannot pay more than 10,000 in cash to any person, correct? That to everybody knows, correct? You cannot give more money to your related parties, to your relatives, correct? Let's assume that we know all of them. What we will do after that also? We know all 14 sections. What will we do? How will we compute PGBP? With the help of knowing only these 14 sections. Try to understand. Get into the subject, please. Can we compute PGBP? I am asking you directly straightforward. Can we, even after knowing these 14 sections, can we compute PGBP without having a P&L account? No, it is not possible. We need to have a P&L first. Without a profit and loss account, it is impossible to compute PGBP. I know that there are certain expenses which are not allowed. I know that there are certain expenses which are allowed. But where will I add and where will I reduce? There has to be a P&L, na? So first the government should say how to make a P&L, that they should tell us. Should we make a separate P&L or should we borrow the P&L of accounting standards? Okay. That they should mention before computing PGBP income. So how to maintain books of accounts? How to make a P&L? Forget about these 14 sections. These 14 sections will come later. Anybody who has done computation of PGBP in your practical life in office, you would know, you will go to client place and first ask for a P&L, na? Correct or not? Only then you will apply your provisions of PGBP and compute add less, add less. So here also, before knowing these 14 sections, I want a P&L account. That how to maintain, how to make a P&L account. For that, the government has given a separate section 145. Section 145 under income tax law talks about maintenance of books of accounts. How to maintain a P&L account. How will you maintain P&L account? How will you maintain books of accounts? That is given under section 145, and in this section there are 3 subsections. Subsection 1, subsection 2 and subsection 3. Pay attention please all of you, one by one I am saying all 3 of them. Subsection 1 says that if you are a PGBP assessee or if you are a IFOS assessee, the government is giving you an option to maintain books of accounts as per cash system or as per mercantile system. Okay, you can follow either of them. You like cash, follow cash. You like mercantile, mercantile is nothing but accrual system. You like accrual, follow accrual. This is the first place where your accounts and tax is getting away from each other. Accounts will never allow you to follow which method? Cash system. The fundamental principle of accounts is what? Accrual system, which we have been learning from the very first day. Correct? Accounts will never allow you cash system, but tax allows you. Cash system means what? Whatever money has come minus whatever money you have paid, that is profit. Are you clear? But accrual system says whatever money you have earned, not received, and whatever expense you have incurred, not paid, that is your profit. Correct? You can follow either of two. Whatever is your choice. But the law says that whatever you follow regularly, consistently. Yes. You cannot change on a year-to-year basis. Suppose in the current year, lot of money is received. So let's go to accrual. Okay. Correct? Next year, lot of money is accrued, not received much. Let's follow cash. You cannot change regularly. You have to follow consistently over the years. Okay. The government is giving you both the options. You follow cash, you follow mercantile. But 90% of the people follow what? Mercantile only. Cash we don't follow in practical life. Okay. Now, subsection 2 says that if you follow mercantile system, then for mercantile system, there has to be some standards. Standards, when I say, I mean accounting standards. There are different ways of accounting across the world. Example, there is one transaction. Is there different way of recording that transactions? Yes, there are. I'll tell you. In India itself, there are 2 options. Ind AS is there? Yes or no? Accounting standard is also there. Ind AS is not mandatory for everyone, na? Correct? It is only mandatory for a company who is having a threshold of turnover more than, I guess, 250 crores. Yes? 250 crore is the threshold. But rest of them will follow what? Accounting standards. In Ind AS, there is altogether a different way of recording, that is fair value accounting. And in accounting standard, you follow the system of cost accounting. I purchased the asset today, I will record at cost only. In Ind AS, you have to record as per market value. Correct? So there are different ways of accounting. IFRS says something else. US GAAP says something else. Correct? So while making the P&L for tax purpose, okay, before doing 3243D, we want a P&L, correct? We are following mercantile. I don't want cash. How should I make a P&L? As per which accounting standards? As per ICAI accounting standards or as per Ind AS, as per IFRS, as per what? As per what? Any idea? What is applicable to the assessee? He is saying what is applicable to the assessee. Suppose if I am a small assessee, then I should make P&L as per accounting standards? Tell me now. I am big assessee, then I should make as per Ind AS and then I should compute PGBP income? Tell me. The answer is no. It used to happen before 2015. Before? Now CBDT is saying we will bring our own. They have brought their own accounting standards also now. That is known as income computation and disclosure standards, commonly known as ICDS. Have you heard about this? Please say. What is ICDS? It's an accounting standard as per tax, na? Tell me. You have to compute your income as per ICDS, not as per accounting standards. Okay? Not as per Ind AS, not as per IFRS or US GAAP or as per your accounting treatments. CBDT is saying that we have brought our own accounting standard. In 2015, they notified it. But fortunately, they have only notified few of the standards so far. They have not notified all of them. Like in accounts, there are 32 accounting standards, correct? For different items, for different incomes. So ICDS are not 32. There are around 8 to 9 ICDS which are notified by CBDT so far. Some of them are there in your syllabus also. As and when it comes, maybe in the next lecture, we are going to do 1 or 2 ICDS. So you have to do accounting as per what? ICDS. Now, why they have brought it? Okay, we need to understand the logic. Why the CBDT is not ready to accept what? Accounting standards. Let us understand this. This is accounts, this is tax. They are exactly opposite of each other. Let's understand how. In accounts, when you recognize a revenue, what does accounts tell you? It tells you to recognize easily or it stops you to recognize easily? Think and tell me. You have done so many accounts and so much accounts in your life. I want to record a revenue of 10 lakh rupees in my books. Okay. In books of accounts, what does accounting standards and your accounts principle tells us? It stops us to recognize so easily. You are not supposed to recognize revenue so easily. There is an accounting standard 9, AS 9. What does it say? You cannot recognize a revenue unless you are reasonably assured that you will receive the money, correct? So unless and until you are reasonably assured, you cannot recognize a revenue. Now CBDT is saying that because of this, there is a loss of revenue in the income tax. Yes or no? Assessee is saying that I have sold goods of 10 lakh, but I don't think so I will receive. Okay. I don't have reasonable assurance. That is the reason I am not recording in tax also. Okay. So CBDT said that in tax, you are not going to follow the accounting standards now. You will follow our standards now. Okay. And as per our standards, reasonable assurance is not required. Okay. You will learn in tomorrow or day after tomorrow's lecture. Reasonable assurance is no more a criteria in income tax. You are assured? Record it. You are not assured? Still record. Pay the tax. Okay. In accounts, you may not record, but in tax, you have to record. See, the objective of tax and accounts is very different. In accounts, this is accounts. In accounts, you want to show you are assessee. You want to show low profit or more profit. In accounts, you want to show less profit or more profit? More profit. Why? Because you want to make your shareholders happy, correct? In tax, you want to show less profit, correct? How the standards of both the law will match with each other when the objective itself is different. Correct? In tax, CBDT wants what? The profit to be high or low? High. The ICI and the accounting standard and the accounting bodies and the company law affairs people want your profit to be high or low? Low. They don't want to unnecessarily inflate your profit and give wrong picture to the shareholders. Correct or not? The objective are exactly 360-degree opposite to each other. Therefore, the department said that we will make our own standards. You have to follow that. Whichever standards we have made, you follow according to that. Whichever standards we have not made, they have not made all of them. As I have told you, only 8 to 9 are notified so far. Whichever we have not made, you can follow the accounting standards and Ind AS, whatever is applicable for you. Okay. Like they have made accounting standard for foreign currency. They have made accounting standards for revenue recognition. Foreign costs, yes, they have made. Inventory, they have made. Construction, they have made. Yes. They have made for subsidies also. Contingent liability and provisions also they have made. So around 8 to 9 ICDS they have notified so far. Anybody who has done tax audit? Everybody has done almost. So you would have seen in the tax audit report also, correct? There's a separate clause for ICDS reporting. Yes, clause 7 or 8 it is. Not 7, it is, I guess it is beyond 10, I guess. It's 16 or 17. Okay, it's not 7. First 8 to 9 clauses in tax audit reports are general discussion. What is the name of the assessee, PAN number, address and all. Correct. Third subsection, please don't talk. Please. Third subsection says, if you violate subsection 1, what do I mean by violating subsection 1? Not following consistently either of the methods. Okay. Or if you violate subsection 2, what do I mean by violating subsection 2? Not following ICDS. Then the assessing officer will do your best judgment assessment. Okay. What is best judgment assessment? We will talk in the chapter of assessment. I'm just trying to explain you the brief idea about it. There are two types of assessment generally under the income tax law. One is called as regular assessment. Another is called as best judgment. In regular assessment, the officer will ask you all the queries. You will reply and then he will pass the assessment order. In best judgment assessment, if he finds either of the two is happening, he will pass the order on his own basis. To the best of his judgment, he will pass the order. He will not ask you also. Okay. That is considered to be one of the dangerous provisions of the income tax law. So once you make the PNL, then you come over here. Okay. And then you read what? Section 3243D. You will come to know what is given in section 3243D. So this is something which I have told you just now. If you want, you can read this much from here. Page number 1.3, please, all of you. Read? So now we need to do section 3243D for the next few days. For the next 30-40 hours, we are going to do this only. All the provisions of PGBP one by one. What is given in section 3243D is mainly three things. Few deductions are given. Few expenses and allowances which you can claim as a deduction. Few disallowances which the government does not allows you as an expense. And then there are some deemed incomes which are given over here, which is a very small part. The main part is this and this. And this also, this is the biggest part. So deductions are the good news for us. Deductions means this is P&L account on the debit side. which all expenses the government likes. Okay. Disallowances means on the debit side, which expenses government does not like, so you have to add it back. Okay. So we will not talk about disallowance first. We will go in the order. First, we will talk about what? Deductions. Pay attention on the board, please. All the deductions of PGBP are given under section 32, 37. Out of which section 34 is omitted. Okay. What is omitted? There is nothing like 34 in this income tax law. Apart from that, all other sections are there: 30, 31, 32, 33, then 35, 36, 37. Okay. 34 is not there only. That's the reason in inter CA inter also you would have never heard something like 34. Now, in 30 to 37, we have to categorize all the deductions into two categories today. Section 30 to 36 is called as specific deductions. What? Specific deductions means all these deductions will come with a name, proper name. Section 30 will come with a name. It is deduction for rent, rates and taxes of building. 31 will come with a name, repairs, plant and machinery. 33 will come with a name. 35 will come with a name. 36 will come with a name. Like this is bad debts, this is interest. Okay. This is family planning expenses, so on and so forth. There are multiple expenses which are covered over here. So section 30 to 36, you need to categorize the chapter like this first of all. You fall under which category? 30 to 36 talks about different kind of expenses which are very specific in nature. Now you only tell me, is it possible for the government to give you an exhaustive list of expenses? Is it possible? Not possible. Correct? So the government is tired now. So at the end they have given what? 37(1), which is called as what? General deduction. And this section only says that any expense which doesn't come over here will come over here subject to some conditions. You have to fulfill some conditions. If you don't fall here, come here, don't worry, don't be unhappy. You have one last chance to be classified under what? 37(1). Last choice is there, last option is there. If you don't come here also, then you cannot get the deduction. So first, every expense which is there in the P&L account, in exam, the institute will give you the P&L account. You don't have to worry about it. The P&L will be ready in the examination. You have to start with section 30 to 43. You have to make deductions and disallowances. This is what you have to do in the exams. P&L is not our duty to make in tax paper at least. In accounts paper, you can obviously make the P&L. Okay. Now, in this also, there are two types of specific deductions. Let us be very clear with the classification. Few deductions which are available to all assessees who are doing business and profession, and few deductions which are available to certain sector-wise. Certain sector-wise deductions are there. You might have learned in your CA Inter, some deductions are allowed if you do scientific research. Have you heard? Or if you make a hotel, hospital of 100 beds, correct? Those are not available to everybody, correct? Those are only available to certain sectors. So in CA Inter, you might have done only 2-3 sectors. I'll tell you which all sectors you have done. One, scientific research, so you have definitely done. Hospital, hotel and all, we have 14 businesses were there together, correct? Cross-country pipeline, warehousing of sugar, all those things. But in CA final, you have to do many other sector as well. Banking sector, telecom sector, okay? Then mining sector. There are many other sectors to whom there are separate deductions which you are not aware of, which we are going to do in CA final. So all the deductions are segregated into 3 parts. 30 to 36 specific deductions, rent, rates and taxes, then you can say bad debts, interest, very specifically mentioned. If not mentioned, go to 37(1), fulfill certain conditions, claim it. In 30 to 36, some sector-wise deductions which you need to analyze sector by sector. For that, before every sector, we need to understand the sector, first of all, how that sector works. Okay. What are the pros and cons in that sector? How is the sector established? Okay, we need to understand that first. So which all sections are covered in the first part, sir? Here, which sections are covered? There are 4 sections which are covered over here. One is section 30, 31, 32 and 36. How many sections are covered in sector wise? There are many sections covered in sector wise. Like 33AB is covered, 33ABA is covered, then 35 is covered, 35AD is covered, 35ABB is covered, 35ABA is covered, etc., etc., etc. The complete list is given over here in your book. You can check it over here. Okay, just check it. One by one, we will do all of them after the chapter ends. You can come to this page and then you will see that all these sections we are completed. Okay. So what we are going to start today, sir? For today, we are going to start obviously this left hand side. We will go in the order. Then we will complete this and then at the end we will come with what? 37 one. So what we are going to start from this 4 sections, sir? No, just wait. So out of this, we are going to start today section 32, which is the biggest deduction of the entire income tax law, and not only PGBP. Okay, of the entire subject, this is the biggest deduction. We are going to start with depreciation today. Section 32. Pay attention on the board, please, all of you. There are a lot of things that we need to speak. It will take a lot of hours for us to complete today's lecture. Mondays, both the session. Tuesday also it will go. Okay. So for 2-3 days, we will only talk about depreciation. Patiently sit and listen. Okay. At the end of the discussion, we will recap the entire discussion and we will try to complete the entire 2 to 2.5 days session in around 10 minutes. Okay. That should be our objective. If we are not able to recap the things, then it's of no use. You are not coming over here to listen a news, okay, which you are listening from 1 year and removing from. That is of no use then. At the end of the day, this is a theoretical paper, correct? That is the reason we are not keeping lectures for 10 to 12 hours. You cannot learn direct tax for 10 to 12 hours. There is nothing to write over here. Unlike SFM, where you have to write, okay, so the time goes. So it's a theoretical paper. Anyways, shall we start with depreciation? There are 4 kinds of depreciation under income tax law. How many? 4. I am writing the 4 types of depreciation on the board. First, just wait, it is there in the book. Don't write, wait. It is given under section 32 subsection 1 clause 2. This is called as normal depreciation under block scheme. Under this is WDV method. Which method? WDV. This is the first depreciation. 90% of the discussion is on this only. Okay. The most important depreciation for our syllabus is this. The second depreciation is section 32 subsection 1 clause 2A, which is called as additional depreciation. Which depreciation? This is also under block scheme. This is also for people who follow which method? WDV. Okay. Third type of depreciation, section 32 subsection 1 clause 1. This is SLM depreciation for power generating units. Which assesses? All those who are engaged in power generation and distribution, for them SLM business is there. SLM depreciation is also there. And the fourth and the last, section 32 subsection 1 clause 3. This is a technical name. It is called as terminal depreciation. Again for power generating units. Okay, not for everybody. So these are the 4 types of depreciation. At the end of the discussion of depreciation chapter, we will be knowing about all 4 of them. Okay, maybe by the end of next lecture or maybe on Tuesday, whenever it will get completed. Now, 90% discussion is this, 5% discussion is this, and 5% discussion are based on these 2 sections. I'm not interested in these 3 sections as of now. I am interested in the first one. I will be Giving you the introduction of the first one today, first of all. Section 32, subsection 1, clause 2. Pay attention on the board, please. Pay absolute attention, please. What it is called as? Normal depreciation under the block scheme. And what is the method over here? WDV method we are going to follow over here. Now, we need to understand what do I mean by block. Okay. You might have done this in CA internal block of asset, etc. Okay. We'll try to understand everything logically, conceptually, when this concept came, who introduced, why it was introduced, so on and so forth. Okay. The term block means it's a group. You have to make group of assets. Okay. You have to make all the similar assets under one group. For example, this podium is a furniture, correct? This bench is also furniture, correct? In balance sheet as per accounts, this will be shown separate? Yes or no? Bench will be shown separate? Chairs will be shown separate? But in accounts, it is separate. But in tax, you have to show all of them under one block. One block you have to show. All of them are considered to be furniture. This is also furniture. This is also furniture. Chair is also furniture. Why? What is the reason behind it? Why this concept was introduced under income tax law? When it was introduced? Let us try to understand one by one all of them. The concept of block of asset came in India in assessment year 88-89. That is previous year 87-88, long back. And this was brought by the finance minister, Manmohan Singh ji. He brought this concept. The income tax department's officers were facing difficulty in computing the depreciation of the assets individually for every asset. Now, this is a very small classroom. In this classroom itself, if you have a look, there are so many assets which are depreciable. Can you name them? This laptop is there, this computer is there, this iPad is there, okay? AC is there, television is there, correct? Benches are there. And you are forgetting the most important thing, where you are sitting, okay? This entire building is there, correct? Yes or no? In such a small classroom, at least 6 to 7 assets are there. Say na. Now just imagine about a big factory of Reliance Industry. There will be hundreds of different kind of machineries, correct? Hundreds of different kind of furnitures, correct? Who will compute depreciation separately for all of them? Who have so much time? Okay. So the government brought the concept of what? Block. Make category of similar assets. Okay. Group all similar assets in one category. Just compute one single depreciation for multiple assets together. Okay. And that is the reason the concept of block was introduced, for ease of calculation by the department. Okay. For us also it is easy. For department also it is easy to calculate depreciation. And therefore the definition of block is given under section 2 bracket 11. Block of asset is defined in this section. And as per this section, they have categorized all the block into first 2 categories. First, tangible assets, and then intangible assets. For tangible assets, they have categorized all the assets into 4 types. Plant, machinery, furniture, and building. Plant, machinery, furniture, and what? Building. And then intangible assets, whatever you can name. Can you name some of the intangible assets? Goodwill. The very first name which you have said, that is excluded from depreciation. Except what? Goodwill. Okay. That is also where it has gone. Goodwill they have removed from 2020 onwards. From when? Till 2020, goodwill was a intangible asset under income tax law. It was allowed as a depreciation. But in 2020, the government made an amendment. They have removed goodwill. The reason is, goodwill generally comes when? Please tell me. When you do an amalgamation, correct? And when you purchase a company, the differential amount which you pay to the other company, that is goodwill, correct? That is generally huge amount because amalgamations are done for thousands of crore, correct? And that is a huge amount, na? That goodwill itself might be hundreds of crore, correct? But the government does not want to give you the tax benefit for the same, okay? So in 2020, the government made an amendment that from 1/4/2020 onwards, goodwill under income tax law is no more a depreciable asset. It is not allowed as a depreciation. Before that, it was allowed. Okay. Apart from goodwill, all other intangible assets like patent, trademark, license, copyright, franchise, any other rights, any other intangible rights, all of them are depreciable at how much percentage? 25% is the fixed rate for them. Okay. Now I am speaking about the rates individually of all the assets. Shall I say? You have to remember, please. It will not be given in the exam. So, by default, if nothing is mentioned in the question, you will take plant and machinery as 15%. How much? If it is written in the question, the plant and machinery, no further description, only written what? Take 15%. Okay. For furniture, you will take 10%. How much? For building also, you will take how much? 10. If nothing is mentioned, if you see the words which you see in the board, you have to apply the applicable rates. If you see furniture, 10%, building 10%, plant and machinery 15%. Don't think much what exactly that plant and machinery might be. Yes, sometimes they will give you the specification of the asset. What is this plant and machinery? What is this furniture? What is this building? Now I will give you the specific rates. Shall I? For intangible assets, there are only 25% except goodwill. Okay. Now let's talk about the specification for building. If only building is written, then what you will do? 10%. Now in building, they have given two specifications. If the building is a residential building, which building? 5%. Now you will ask me how residential building is a depreciable asset, correct? Yes. Can a residential building also be used for business? How? For employee stay, correct? You are using that building for the stay of employees are staying, okay? So if the building is residential, then 5%. Second and the last category of building. In building, there are no multiple categories, only two. If the building is a temporary structure, what kind of structure? 40%. So there are only three categories of building. By default, 10%. Residential, 5. Temporary structure, 40. For plant and machinery, there are hell lot of rates. So one by one, listen please carefully. Shall I say? Pay attention. By default, plant and machinery is, if nothing is mentioned, take 15% and claim depreciation. Okay? Shall I go ahead? Now listen, specific rates. Please pay absolute attention. Computer and its peripherals. Peripherals means whatever things come with the computer. Like there is a UPS over here, correct? There might be a printer, there might be a scanner, correct? There is no need to see that. Okay, you can that all will be subject to how much? You might have done in your office also. Yes, computers are depreciable at 40%, correct? Shall I go ahead? And computer is coming under which category? Plant and machinery. Pollution control equipments. How much? 40%. I'm just listing all 40% cases first. Shall I? Let's go by rate. Okay. Then comes professional books. What? 40%. If I am buying an income tax act, okay, or if I am buying any other professional book for the purpose of my profession, that is the biggest asset for me, correct? Whatever knowledge I have is all because of what? Books only, na? So knowledge will not come to a professional from other assets. It will come only from books. So for them, but the books are considered to be what? an asset, and that will be subject to 40% depreciation. Don't write, please wait. Everything is there. I will read from the book. Just wait. Then what else come in 40%, sir? Windmills. What? Windmills will also come under 40%. Windmills are used for power generation, electricity generation. Aircraft will also be depreciable at what? 40%. So these are the assets which you have to remember, which will be depreciable at what rate? 40%. Now there was one assessee who was making an argument with the department that this mobile phone is also a computer. What? He was making an argument that what is that one thing that mobile cannot do, which computer can do? Correct? Yes or no? Everything mobile can also do in today's time. But the court said that no, mobile phones are not computers. They are general plant and machinery. They will be depreciable at what rate? 15% only. They will not be getting the 40% rate. Are you clear? But according to me, and you will also think that they should increase the rate, correct? 15% is too less. 15% rate means how many years it will take to depreciate? 7-8 years. Who keeps mobile phone today for 7-8 years? Please tell me. Earlier, not Nokia phones used to come, right? Which we used to keep for 10 years. Nothing used to happen to that. So the rate is too less for this. Okay. So mobile phones I will write over here, even though there is no need to write, but still I will write because it comes under general rate, but still I will write. It will be depreciable at what rate? 15%. Shall I go ahead? Chips. Chips are depreciable at 20%. How much? 20% chips will be depreciable. Specific rate 20%. Then one asset by the name called as EPBAX. Have you heard of this? Have you heard of this asset? No. It is nothing but a intercom system in a company. If you go to a company, there is an intercom system, right? Which is there in hotels also to call to the reception or to any other person. Okay. That is called as what? EPBX. There is some full form of this, electronic, etc., etc. This is not the name. There is some full form of this entire term. E stands for something, P stands for something. Understood what I'm trying to say? So this is also depreciable at what rate? This also you cannot call as what? Computer. Okay. It will also go along with mobile phones only, like a phone. Shall I go ahead? What do you feel about motor vehicle? At what rate motor vehicle should be subject to depreciate? 15%. Okay. Now listen. For motor vehicle, we have to do some very important discussion. Pay attention on the board, please. By default, if nothing is mentioned, motor vehicle is a general plant and machinery. You can claim 15% depreciation. But if your motor vehicle is an electric vehicle, which vehicle? To encourage electric vehicle, the government has said that for EVs, the depreciation would be how much? 40%. Because we want to shift from where? From traditional vehicles to electric vehicles. Okay. So we have to give some kind of encouragement to the taxpayers. So they have given it. Now forget about EV. I'm coming back to the normal vehicles. If you are in the business of hiring motor vehicle, your business is of running motor vehicle. Like your business is a transport business. Okay. So in that case, is your motor vehicle running more as compared to a normal motor vehicle? Yes. So that will be subject to how much percent depreciation? 30%. Is it clear? So if I buy a motor vehicle, for what purpose you are bringing a motor vehicle, sir? I bought a car to go to my classes to take lectures. Okay. How much depreciation I will get? 15%. But if a transporter buys a motor vehicle, they will be subject to 30%. Now one last thing, last rate. That's it. In 2019, there was a huge recession in automobile sector, that is in car sectors. Okay. All the car companies went to finance minister. Finance minister, at that time, Nirmala Sitharaman ji was the newly made finance minister in 2019. He was appointed in 2019. So auto industry sale was falling like anything. For 3-4 months back to back, the sale was falling. There was a huge recession. So industry told finance minister that you have to do something. To what? To boost the sales, automobile sector. So they brought one press release on 23rd of August, 2019. Keep this date in your mind, please. It is a very important date for us in exams. And they said that any person who purchases a motor vehicle from 23rd of August 2019 to 31st of March 2020, that is for how many months? Approximately 7-8 months, correct? If you purchase and use motor vehicle, you have to do both the things between this period. You have to purchase and put to use, okay? If you purchase and put to use the motor vehicle between this period, then you will get extra 15% depreciation, okay? Lifetime on that asset, on that asset, on that machinery, on that car, understood? If you buy anything beyond this period, then you will not get extra 15, okay? It means here you will get 30 and here you will get 45%. Are you clear? So this was just an encouragement for the businessman to buy the motor vehicle in bulk during this period. Now I felt very sorry for these people who bought the vehicle during this period. They might have bought. Why they would have bought? All those who have planned to buy the vehicle in the next 6-8 months, they would have bought not during this period. Let's prepone the plan, correct? Why? To claim extra 15% lifetime, correct? So they would have bought the vehicle, okay? And then there was a lockdown for 1.5 years. Okay, they would have not been able to use the vehicle substantially during this period. Yes. So that was obviously not the mistake of the government. Even government did not knew on 23rd of August 2019 that lockdown will come in 2020. Okay, that was quite natural. That there was no mistake of the government. So these are the rates that you have to remember. Okay, let's see. We have covered all the rates or not. If any rates are missed, we will check it over here. Oh, I think so. I've covered all the rates. Come to page number 1.5. You can check this. Let me know if any rates we have missed over here. Have we covered all of them? These are the rates you have to remember, minimum. Okay. They will not give you the rate sometimes. Sometimes they will give you. Sometimes they might not give you. Now, one last thing I will discuss for the day. Okay. Then we will conclude what we have done in today's session. Then we will end the lecture. Next lecture will be on Monday. You have told Chaitanya sir to reschedule the break period for slightly earlier at 9 p.m. because the breakfast will get over at 9:30. So we will keep the break at 9 p.m. Okay, 9 a.m. Sorry, 9 a.m. Sorry, not p.m. So that 9 to 9:30 will keep the breakfast. Okay. Now, have you read all? Just read. Just try to remember these dates. I will randomly ask anytime. Please. Now, one last thing we will discuss for today. Pay attention on the board, please. This is previous year 25-26 and I have bought a furniture of 1 lakh rupees. Furniture is depreciable at what rate? 10%, and furniture there is no multiple rates. Furniture always 10%. Okay. For building there are two different categories. For machinery there are multiple categories, but for furniture there is no category. Now I have a question to all of you. That in income tax law, you will not get the depreciation unless and until you put the asset to use. Okay, you have to use the asset. Only purchasing the asset is not sufficient. You just purchase the asset and you're keeping it in your cupboard That will not give you the depreciation. You have to use it for the purpose of business or profession. Okay. Only on usage you will get the depreciation. More detailing on use we will do on Monday. Okay. What do you mean by the term use exactly? But use is important. Without use, you will not get depreciation. Now I have a question to all of you. Suppose I purchase the furniture on 15th of March 2026. I purchased. And I also used from that day for business and profession. My question to all of you, as per your accounts, forget about tax. As per your accounts, how will you compute depreciation on this asset? For how many days? For how many days? See, the 15 has become 16 in 30 seconds. Okay. Now it will become 17 also. Think properly and make 17. How much? It is 17 days. Okay. Because you have started to put to use from which date? 15 will also be counted. So 15 to 31st March, how many days? 17 days. 1 lakh into 10% into 17 divided by 365. Whatever answer will come, you will claim in the books of accounts. Okay. Like that, 365 different answers are possible. Depending upon the date of purchase, both. Yes. If I purchase on 1st April, then 365. 2nd April, then 364. 3rd April, then 363. Like that, 365 answers are possible. Who has so much time under income tax law to compute depreciation on a daily basis? Who will check all these things? If somebody has purchased and put to use on 15th of July, who has so much time that we will start to compute from 15th July to 31st March? How many days are there? Forget it, leave it. There has to be some simplified way of computing depreciation, correct? Therefore, what does the income tax law says? The income tax law says this line, please. I want you all to see this line only. Just wait. Don't see anything. Please close your books, all of you. Fast. Because otherwise you will not learn something very important. Have you closed the book? Please don't see. You have to read this line. Have you done this line in CA Inter also? That the depreciation becomes half if you put the asset for less than 180 days. What about exact 180 days? Tell me. It will be full, correct? So I have some questions to all of you. Do you want to see this line once again? Now then I will not show you after I ask the question. If you want to see the line, you can see. Online students can do anything. Okay. You guys cannot do anything. Tell me. Okay? Sure. Don't make a mistake. Then if I ask a question. See on the board, please. Same furniture, if I purchase and put to use. I purchase and put to use on 10th of April 2025. How much depreciation? You have to just say full or half. Full. 10th of July, how much depreciation? Full. 3rd of July, how much depreciation? Obviously full. Okay. 3rd of January 2026, how much depreciation? Half. 3rd of March 2026, obviously half. 3rd of August 2025, how much depreciation? Louder. 3rd of October 2025, how much depreciation? And the answer is full. Okay. Take your calculator if you have calculators. Compute. Or orally also you can compute. A CA final student, you are taking calculator for counting days. 3rd October to 31st October, how many days? 29 days? Say na. 29 days of October. November, how many? How much happened? 59. December, how much? 90. January, how much? 121. February 28, it's not a leap year, correct? So 121 plus 28, how much? 149. March, how much? 31. How much happened? 100 and exact 180. Full or half? Full depreciation. So 3rd October is cut off for us. 2 days back. Okay. Yes. 2 days back. Correct. Today is 4th. Okay. So 4th October. In my watch, it is showing 5th October. I don't know how. So 3rd and 4th October is the cutoff for us. If you put to use till 3rd October, then it is full. If we put to use from 4th October, then it is half. Is it not simple as compared to accounts? Tell me now, please. In accounts, for every day you have to compute, correct? In tax, you have to just say whether it will be full or half based on 3rd and 4th October, correct? Yes. So in exam also, you have to remember this date, please. You don't have to sit and compute the days, okay? So will you write down here itself in the book? Okay? Where? Here in the book itself, if the assets are used for more than equal to 180 days, see the sign properly, okay? That is till which date? Till 3rd October 2025. Is it clear? And less than 180 days will happen from when? From 4th October. You have to remember just this one date. The doubt will only come for the month of October. Rest of the month you will be very clear. Okay? This was not the reason I cut that line. I cut that line for my next question. Okay? Do you again want to see this line? No? Sure. Now let me ask you then question. This will be my last question for the day. And that will be the end of today's discussion. We will recap in 5 minutes after that. Date of purchase, I am making one column. Date of, can this differ? Yes, it may differ depending upon the SSE. First point. I purchased on 15th of April 2025 and I put to use on 15th of April 2025. You have to tell me the year in which I will get the deduction and whether it will be full or half. Okay. Tell me first. Previous year, 25, 26 and full. Second, 15th of April 2025 I purchased and 15th of December 2025 I put to use. 25, 26 I will get deduction and I will get half because it is put to use for less than 180 days. Okay, shall I go ahead with the third one? 15th of December 2025 I purchased and 15th of March 2026 I put to use. Previous year 25, 26 I will deduction and it will be half. Okay. You will make a mistake. Okay. Wait. I will be very happy if you don't make. 15th of March 2026 I purchase and 15th of July 2026 I put to use. Which year I will get the deduction? Previous year? Full or half? Full. Why? Okay. 15th of March 2026 I purchased. 15th of March 2027 I put to use. Previous year? 26, 27 I will get it full or half? And the answer is full. I said you will make a mistake. Okay. Now read this line once again. No. There is one word. Let's wait. There is one word over here for which we don't give respect in day-to-day life. Okay. Please give respect to that word today. Did you realize? I will explain from my side. Okay, don't worry. But did you realize what mistake you made? What is written over here? It becomes half when the asset is acquired and put to use for in that previous for less than 180 days, not in the next previous year. Are you clear? It means that 50% provision is applicable only to the year of purchase. It is not applicable for subsequent year. It means if I purchase in this year and if I put to use the asset in the next year for just 1 day, how much? Still I can claim 100% depreciation. Are you clear what I said? Now I will remove this. Okay. Okay. Check. Is it clear? Now I will show you the example from volume 1. Okay. Come to page number 2.5. Read this Bare Act now. This is Income Tax Act. And then there is an example over here for your better understanding. Okay. You have not done this in CA Enter? No? When any asset falling within a block of asset is acquired by the assessee during the previous year. In my example, it was acquired in which previous year? 25-26. And is put to use for the purpose of business and profession for a period of less than previous year in 25-26. Are you clear? Then 50% provision is applicable. Did you understand? Check the example also. Okay. So they will twist this in the paper. They will deliberately give you that in 24-25 assessee has purchased. For us, 24-25 is last year. Say na. And in 25-26 in March, you are putting to use. How much depreciation you will claim in the current year? Full rate. Okay. Furniture 10%, machinery 15%, full. Are you clear? Yes. Check it, please. So now we will just recap the things what we have done today. You can close your books, please. You try to recall whatever you are not able to recall. I am here to tell you. Okay. So we have started the discussion in this session from classification of income, correct? By default, interest income will go where? Other source. Okay. But can it also go under PGBP? When? If your intention is to earn some business contract or something like that. Okay. By default, dividend income will go where? Otherwise, it will go where? IFOS only. For dividend income, there are no two options. Okay. Business and profits and gains, where it will go? It can go in capital gains also. It can go in PGBP also, depending upon from what asset you are earning that gain. Okay. Then comes the most important, house property. Correct? House property income. By default, if I have property, I let out that property to you. Where it will go? Income from house property. Correct? If a builder let out house property, where it will go? Income from house property. Builder also has the same work as others. His work is not to let out. His work is to sell. When the house property income will go in PGBP? Only if you fall under Chennai property case law. That too for which property? Commercial. Residential property not possible, only under PGBP. After Finance Act 2024. Okay. If your main object is to let out and your substantial income is from letting out, you can go under PGBP. That too if it is a commercial property. Okay. Then we started with the discussion of PGBP section 28 charging section. We have only done the general charging section. We have not done the special charging section as of now. We will take up that in future lectures. General charging section says what? Profits and gains from business and profession carried on by the assessee at any time during the previous year. What do I mean by the term business? Business includes trade, commerce, manufacture in the nature of adventure. What do I mean by profession? Vocation. I have a warehouse. Which I have let out to you. Okay. And along with that warehouse, I am not giving you any services. Only warehouse. Then house property. But along with the warehouse, if I am giving you fumigation services, pest control, security services, correct? Then where it will go? PGPP. Okay. My factory is under lockout for few months, so I am letting out my plant, machinery, furniture for few months to earn some money. Where it will go? PGPP. Then comes the next part. What is profits and gains? 4 characteristics. It should be revenue in nature. It should be cash or kind, both will be covered. Third, legal, illegal, both businesses are subject to tax. Should be real profit. Are notional profits also subject to tax? Separate sections are made for them. 44 AD, ADA, AE, etc. Then the business should be carried on by assessee at any time during the previous year. Then we went to computation. How to compute PGPP income? According to 30 to 43D. But before that, what we are supposed to do? We need to make a P&L account. 140 as per 140. What does 145 say? Cash, mercantile, whatever you like, follow, but follow consistently, regularly. Don't change every year. What does subsection 2 says? If you follow mercantile, then you have to follow standards. Which standards you will follow? ICDS, for whatever ICDS they have notified. Okay. And if I don't follow ICDS and if I don't follow consistency, then the AO will do best judgment assessment. How best judgment is done, that is a separate discussion. That we have to learn in the chapter of assessment procedure. And then we started with the classification of sections. Some sections are deductions, some are disallowances, some are deemed incomes. And in deductions, we have classified all the deductions into 2 parts first. General and specific, and in specific also 2 parts. Available to everyone and available only to sectors. We are right now only interested in one deduction, and that is depreciation 32. Slowly and gradually we will move ahead with the other deduction. And there are 4 types of depreciation, in which we have started with the first one. That is normal depreciation under block scheme, and we have defined the block. So one thing I would like to ask you all, just before I conclude. There are how many blocks in all? No, it is wrong to say. 4. I will tell you the correct definition of the block now. Block means similar category with a similar rate of depreciation. Okay, the rate also should be similar. Is computer a plant and machinery? Is mobile also a plant and machinery? Can both of them come in same block? No, because the rate is different. Correct? Is residential building also a building? Is temporary structure also a building? But we need to make separate blocks because the rates are different. That is the reason in your book also it is written at the top. See what is block of asset. Same category with same category and rate. Rate also should be same. Correct? So all 40% machinery will come together. Okay. All 15% machinery will come together. Correct? Okay. So just I will ask you the rates. I hope you might be remembering the rates as of now. But still, randomly I will ask you some of the rates. You try to answer me and then we will end the lecture. What is the rate for EPBAX? 15%. Computer and its peripherals? Motor car purchase on 23rd August 2020. Huh? Additional 15? Have you heard my date? 23rd August 2020 I purchased. 20. Extra 15 you will get? No. Extra 15 is for whom? 2019. 2019 to March 20. Correct? Then comes temporary structure. Goodwill, no depreciation. Patent, 25%. All intangible assets, 25% except goodwill. That's it. We will continue the discussion on Monday with depreciation. Okay. If you have any queries, you can ask me, please. No queries?